this music. If you enjoy the music on my streams, it's actually my own. You can go on SoundCloud and look up Red Band and find some more. I've been playing guitar since I was 8 years old, so pretty long time. I'm not going to tell you how old I am, but I'll tell you it's a real long time. So you should always have a couple hobbies that bring you some joy and passion in your life, and music has always been one of them. So, what we are going to do tonight is a little different than usual. I'm going to do this in a live stream so that I can potentially get some feedback and answer some direct questions. But I've had a few of the new members in the Trade and Perform room where I trade futures have asked for some additional instruction on how, like, which trade setups I personally prefer, because in the Trade and Perform process that my coach Simon teaches, there's a whole book basically of different trade setups, and there are certain trade setups that work only in specific environments, and there's others that work almost always, right? None of them obviously work all the time. That's not a real thing. But some of the highest odds ones do work 70%, 72% of the time, based on our regular back testing. When the environment is good, if you know how to if you know how to read price action, kind of tell when the price action isn't garbage, you can get a pretty good win rate out of just a few of the setups. But I have after trading this system for more than a year, I've gone beyond the high odds setups, because they don't show up all that often, right? You're only going to get those opportunities a couple times a day when you have like a 70% chance of being right. And while you need to know them, and it's a good place to start, it's nice to see what like a more developed trader does, so that a new member can kind of look and see, like, first of all, recognize that I'm actually taking the same trades that Simon's recommending that they like research, right? And second of all, like how I've branched out and added additional trades, and which ones I'm using right now. The other thing, even if you're not in the trade room, that you might appreciate from this video is to see that all of my trade setups, they have, first of all, specific rules that stay pretty constant. They do change as I do more research and learn. So I'm not going to say they never change. They are dynamic based on just what's going on in the market. If something's not working, I will pull it from the process and then do some homework and figure out why it's not working and whether or not there's something that needs to be optimized. And if you want to see that process, you can look at any of my other live streams. I have demonstrated that before. But what I haven't done is gone one by one, showing, here's the execution for this trade, and here are the rules, and let's go find some of those and see how they did, right? That's something I have not done. And like I said, it's been requested that I do that, and I think it's a good idea. I was going to say, the other thing you'll find, other than the fact that they all have strict rules that generally don't change a lot, is you'll also see that most of them have at least two distinct phases, depending on what type of setup it is. But most of the trades will have first a signal, right? And that signal is basically like that certain conditions exist where the possibility of getting into that trade may occur. And then in addition, there will be a trigger, which is the thing that happens that gets me into the trade. Where a lot of people get confused is they get really stuck on all of the algo signals and the colors. Now the one I usually use is a little bit more complicated. It's got some extra lines and signals that I've added. We're gonna start with one that's a little bit more similar to what the trade and perform algo looks like originally. So on Simon's chart, it looks a lot more like this. The only difference on my version here is that these bars that are filled in green on Simon's algo on his screen, those look like little boxes that I think they're blue now, and then the orange ones are the boxes that are white on Simon's. I find it really hard to see those little boxes, so I changed it to color bars. And what you'll see is, like I said, I do use this version for reading the market because it's a little bit cleaner. But when I'm actually looking for setups, I use something a little bit more complicated. Just has a couple more like filters in it. But what you'll see is all of the same signals are still there. I haven't it's like supplemented. I've supplemented them, but I haven't changed the originals. Right, the originals are still the same, and all of the conditional rules are still the same. So where you see a star here, it might be a different color, but it's the same rules on mine will produce the same exact star, right? So it's now the thing that what you will notice is that some of mine won't. Where on Simon's chart he might have some things, I might have them missing, and then on my chart I have some things that he doesn't have, right? So I'm not going to go step by step and like explain each one of these signals because I don't think that's that helpful unless you have like some dying desire to learn what something means because you think you see a pattern. It really doesn't matter what the conditions are that produce these. All you need to know is that the algo, whether or not it's this one or the original, which looks like this, in both cases, all they're doing is they're looking at the footprint, right, and they're reading information from that, and then from the DOM, right. So like the maybe the delta and the volume and the what's it called? Like so many different things, right? Whether or not there's absorption, whether or not there's a big order that's been reloading, right? Like some of these things are what these signals are actually looking for. But like I said, you don't actually need to know that to understand. Now, if you have the algo on your desktop, which, like I said, you have to be a premium member to have that, but you could have this up and then pull up the, let's see, this is NQ. So you'd pull up this and you could, if it's aligned right, you could technically, look at side by side and be like, oh, I see, there it is. Like now I see why that's a star or whatever. That, if that's useful to you, like, you could do that. But I don't think that that's actually what most traders want to see. They don't really care like what the actual conditions are. But I think what's actually useful for most traders is to see what the structure of the execution rules are, because no matter what I'm looking at to get me into a trade, no matter what it is, what you're going to see is, like I said, all of these setups have a lot in common. They all are structured the same way, and so whatever you use to get into a trade, just imagine that when you see that there's a star that shows up, or when you see that, imagine there's a green bar, right? It's just whatever you normally get that gets you triggered into a trade, right? So, like I said, we're going to start here because this one's easier to read. And there's just not as much. And plus, any brand new TNP member is more used to this this view, right? With less signals and just like these specific colors. The only difference is the green and the orange bars, which is the POC above and POC below, right? The little dashes in the bars they're really important. That is, I'll tell you, is the point of control, the volume point of control of the actual Renko bar. So the way the Renko works, if you're not familiar with Renko, here we can watch it live and you'll see it. So these are down bars here, which means the market went down. You can see the time down here, and you'll see they have nothing to do with time. That's only got to do with range. So in this case, the range is 24 ticks. So as it goes from the top down 24 ticks, it's going to build a bar that closes at the bottom. And then if it goes another 24 ticks down, it's going to close another bar that's to the downside. And then if it goes another 24 ticks to the downside before it goes 24 ticks to the upside, it's going to make another bar to the downside. So you're basically seeing rotations of the market without a constant of time. So if you look at a candlestick chart, here, it's the same thing in a candlestick chart. You can still see the rotations, right? You could still see these little micro rotations, and maybe if you went a little bit zoomed in a little bit more, you could see them even further. You can see that like every time we got a movement, you'd get bars printed, but in this case the constant is time, right? So every single bar is just automatically printed at 5 minutes. While that might be helpful in some ways when it comes to looking for candlestick patterns, when you have price action like this, what you end up getting is bar after bar after bar that's right on top of each other, and you will miss some really critical information when it comes to looking for when it's going to break out of that, and it has nothing to do with time. And so you're seeing where these opens and closes are, but that's only got to do with where the market was at that specific time. Sometimes that's important, right? But a lot of times if you're just bringing price action, that's actually the least important thing. I mean, it's good to know what time it is, right? I need to know like when London opens, and all these things obviously matter, right? There's different phases depending on how many people are participating and all that. But whether or not it came on the first or the second 5-minute bar after the impulse move, I could care less about that, right? What I do care about though is whether or not we have been stuck in the same range without leaving it, right? That I do. I don't care how long this takes, really. Here I'm talking about this, right? I don't care how long that takes, but I want to know where the edges are here very, very clearly. I want to see that. And with Renko, it's very obvious where those edges are, because there's no distracting closes and opens and all of that from the time chart. So that's how the Renko bars work. And like I said, they're just colored, and they have signals depending on what's happening on either the DOM or the order book or the footprint, right? So let's jump. Oh, and then these lines here are something we call bands or a channel. And the way they work is similar to something like a Keltner channel or Bollinger Bands. So most of the volume should happen in between the purple and the yellow if it's balanced, right? Then you have another level, the blue and the orange is like an outer level, and you should have most of your volume inside of those two bands almost always. The only exception is when you have momentum in the market. So when you don't have momentum in the market, what you tend to see, like if it's balanced like this, what you tend to see is that when the market goes beyond either one of those outer bands, it's very natural to mean revert back to the other side. See that? And so if you were trading mean reversion, which is usually what we're doing, that's the only way you can get a 70% win rate, by the way. There is not a momentum indicator or a momentum setup that will work 70% of the time. It just doesn't exist. I'm not saying you can't trade momentum with futures, but you have to be ready for what a 30% or 35% win rate means when it comes to trading with leverage. And I find trading mean reversion with leverage is a heck of a lot easier because as long as you're managing risk, that is. But yeah, if you identify that it's balanced, and then you're looking for whatever your entry signal is, right? What the algo wise, like if it's a triangle or an orange bar or whatever, you'd really want it to show up here, right? A orange bar or a star or anything that shows aggression to the downside, a down bar with an algo on it, right? That one doesn't have, that's just a regular bearish bar. But let's say this one is a good example, or this one, or this one. they're going to be way more powerful in a balanced market if they happen upstairs, up here, right? The same exact signal that happens down here, these are all going to be very, very vulnerable. Very, very vulnerable. Because if you think about what's happening, if you're balanced, you've got an aggressive seller selling where the market is already kind of like oversold, right? I don't love that term, but like if you just look at the way that things normally work, it takes a lot of energy to move the market from one side of the band to the other side of the band. And if there's no momentum, it takes even more, exponentially more energy to keep it outside the band. So what you end up getting is these potential traps or aggressive traders that are trading on the wrong side of the bands. Whoops, I'm pointing to the wrong one. Produce opportunities for mean reversion trades back to the other side of the band, right? So that's it's a concept that we use constantly. You don't need to know, like I said, what these all mean, but once you learn, for instance, like even if you just learn 2 of them, and you're just like, okay, every time I see a star, I'm gonna think aggressive trader, right? And so now take a look at where they are and what happens next. You have a star down that comes at the bottom of the downstairs under the bands. They get 2 bars and it immediately rejects, right? You've got a star down at the bottom of the bands. 1 bar after that, what happens? Immediately rejects, right? You've got a star here in the middle of the bands. Guess what happens? Immediately rejects. Right? Now let's look at the other side. It's just white stars at the and so white stars at the top. White stars. Let's start over at the left. White stars at the bottom should be well positioned, aggressive buyers. These guys are buying where they should be buying because naturally price is going to come back to the middle, just like it did right here, right? This guy is also well positioned. Guess what's going to happen? Price is probably going to come back to the middle of the bands. That's just what it does. Sometimes it's going to go further than that. This guy is a little out of position, but he's still in contact with the back of the bar. See that? And the VPOC, that dash, is way back here. He is well positioned. He's still okay. This guy, on the other hand, is not. This one is vulnerable. And it would be even more vulnerable if it was way up here, but buyers haven't put any aggressive action in up there recently. But many of our setups involve identifying the potentially vulnerable buyers and sellers, like these guys, and then looking right after them for an indication that the other side is responding, right? So multiple setups use that concept, and if you don't understand how the bands work, that's really hard to see. So the important thing to understand is that a star or any of these algos on one side of the band does not have the same meaning when it comes to like what you expect to happen next on the opposite side of the band. A white star or an up bar with aggression down here is potentially an entry signal, whereas a white star or any other aggressive signal like a green bar is also a bullish aggressive signal. That would be a potential trap to look for downside moves. So you could that might be the signal to look for the bearish trigger, right? And like I said, this will start to make sense once I go one by one into these setups. So let's start with the highest odds execution we use. And that's something that Simon calls the trap back in, what I've also referred to as the second mouse trade. The concept here is that especially when you're in balance, it's a mean reversion trade, first of all. It's not necessarily a reversal. You don't want to use it counter trend unless you think unless you have evidence that trend is losing momentum. An example of a trend that's losing momentum would be putting in an aggressive bar down here that can't get any extension, right? So once I see this, I know we're probably not bearish, because this shouldn't happen when you're bearish. Let me show you what happens when you're bearish. When it's bearish, you get underneath the channel and buyers give up. When they try to attack, sellers hit them hard. They don't get any extension back to the middle, right? That's what it looks like when it's bearish. When bearish momentum is failing, what you see is aggressive sellers, like I said, orange bars are an example of that, getting trapped, right? That is an example of where now I can start looking for mean reversion trades to the upside. I would not be looking for buys if I saw this price action. And that's really important to understand. If you want to have a high win rate, you need to know the difference between trending and balance. You're going to miss some V reversals, right? You're going to. Like, it's just going to happen. With this system, you're not going to catch. It's not built to buy the bottom and sell the top. You're not going to catch the V reversals, okay? We are looking for setups that give evidence like this early on that this trend is running out of steam, right? And so now when we see this, what should happen next if it's bearish is this is an aggressive seller. We should see an extension, another move down. And here, I'll show you. It happened earlier today. We had sell, so like sell, right? Balance, sell, right? There's nobody getting trapped here. It's just sellers staying in control the entire time. Balance, okay, sell, right? There's your aggressive seller. He's trying to push down a second time. He fails, right? Once that happens, now I am looking for mean reversion trades. Truthfully, to either side. I can take them to the short side too, but this is much easier to see if we look at it from one direction first. Especially if you're only used to taking long trades, you'll get confused really easily if you try to look for both. If you're good at spotting shorts, you'll see them right away. But I'm going to do longs first. So an example of the trap back in setup is, like I said, first we need any momentum in the market to slow down, right? So for example, a bearish bar underneath this downstairs here. Hold on, I think that's my cat making noise. Let me just make sure it is. So it's we need an aggressive seller to get stuffed. That would be one piece of evidence that the bearish move is done. Otherwise, we need some sideways action, right? We don't want to do it when it's doing this. Don't buy that. Don't buy this, right? Even if it looks really good, don't do it. Like, don't try to be the hero buying the low. Wait until you have evidence that that guy who tried to continue lower got beat, right? So as soon, like I said, here, I'm thinking probably still bearish. It's probably going lower. And then it's like, oh, not bearish anymore. Start looking for mean reversion trades. Am I going to catch this? No, I'm not going to catch this long. If this, and that's got to be okay. Because in return for not catching this move, right, that maybe I'll catch 30% of the time if I just bought every single green bar down here. Instead of doing that, I'm going to wait for the high odds trade, which it only occurs after the momentum is clearly gone. So the trap back in, what it looks like. You need an apex. What is an apex? On Simon's, it looks like these upside down triangles here that are blue. On mine, they're little purple flags. I'll show you. These little purple flags. Same exact signal, different picture, right? So they occur at the edges, right? Which is why we call them an apex. They're the one trade and perform algo that does not print right away. They print only after like about 2 more bars are printed, but that's okay because we don't use them to try to get in. See, because if you knew this was going to be here right away, you would just buy this. Right? And that'd be pretty cool. But this one is the only one out of all of these that have a delay, and they delay for a reason. They delay because we don't use them to try to get into a trade here. What we use them for is to identify that bar, that the range of that bar, as an important point. It's the apex of the rotation. So then there's another one right here. See that? So this apex is associated with this bar here that has the star on it. So what we can do to mark this, if we know it's mean reversion or balance, or I should say if we know it's balance, we know we're looking for mean reversion trades. And if all you're trading is the trap back in or the second mouse trade, once you see one of these, either one of these, you could put a line underneath it. Okay, that's the first step. And what we are looking for, we want the market, it's going to be this one. So I'm just going to take this one out just so people aren't confused. But it's going to be this one. But normally you don't know, right, which one's going to get tested. We want to see the market cross that line and find buyers there, not sellers. Why? Because we think it's mean reversion, and mean reversion should find buyers underneath the channel. And where should the market go back to? Probably up here. Okay, so when that happens, right there, okay, they trade underneath it, right? The very next bar must close bullish for this trade to trigger. So I know I'm looking for the trade already. Right? Remember, I see this. I don't see this yet. I get this bar. I get this bar. This suddenly appears. Now I pop that on there. A couple bars later, I wait for this. I'm still not in the trade, right? I'm just preparing. I know exactly where the next bar is going to close. There's a range predictor that tells us where it's going to close. Here, I'll show you. So see over here, 10.877 or 10.85875. If it's a bullish bar next, if this one closes bullish, this is where it's going to close. So if this was going to be a signal, I would put my order as a stop order at 10.87725. And I'd immediately get filled the moment after it filled, because it would fill, and then if it went one more tick, it would fill me. If I was looking for a short, well, then I'd be looking over here and I'd see 10.85875, so I'd want to get short at 10.85850, one tick below that, if the signal was that this closed bearish. Because that way, if it closes the opposite direction, I don't get triggered in, which is really great, right? If you don't get triggered, you don't lose anything, because there's no trade. You just cancel the order. So you're prepared. You know exactly where your entry is. And so, like I said, you only see that live. When I go back here, I won't see the range predictor, but just know when it was live, we know where it's gonna close. So when the next one closes bullish, it doesn't even matter if it has a sign of aggression like a star. It certainly helps when it does, but it doesn't need one. It's still a valid trade to the long side. And so what makes this so powerful, this is the trap back in, by the way. Yeah, like I said, that is the signal. It's testing below it, and then in one bar, either the same bar or one bar after, it closes bullish. That's all it's got to do, and it's got to be on an apex. So what am I expecting from this? Am I expecting the entire day to get reversed? Am I right? No. This is not a swing trade entry. This is a mean reversion trade. What I expect is for the market to come back up to the last apex or so. So see this little thing on the top? It's the same as this, right? So these are the apexes on the top. So if I was going to take this trade, my primary target is here. Could I hold runners? Sure, right? If I had a reason to think that this might be the low, like maybe the footprint showed a low volume node here, or maybe we just filled some single prints and I think that we're probably getting into the potential low of the day now that the momentum is slowed down. Yeah, you can hold runners. But just randomly, no, I don't hold runners. I usually only take these trades if I think I have a range of about 15 points or more. Oh, and so importantly, the stop loss on this is always 1 point below the bar that you enter on. Always. For literally every single one of these trades, that's the same. It's always the bar underneath the bar, which is what's great about Renko. It means all of my stops are going to be about 15, maybe 16 points, depending on how long this wick is, because that changes based on where it opened and how far they went, right? Because if they would have gone a little further to the downside, it would close bearish. But it didn't meet that level, and instead it met the higher one. So this wick can be pretty long. But you can see that sometimes, like here, it's not long at all. I don't know. Oh, because I got the wrong tool. Like here, this would be, if that was your entry, your stop would be like 10 points on the NQ. Whereas here, the NQ stop is more like maybe 15 or 16 points. We could look right now here. So the entry would be 64.25, 64.50, let's say. And then your stop would be, let's see, the bottom of the bar exactly is, make sure I got this right, 48.75. So I'd take it down to 47.75, right? So what did I say it was? 64. So yeah, 16, right? 17. It's usually right around there, right? This is a little bit bigger than usual then. But one way or another, it's not going to be 20, right? It's going to be somewhere around like average 15, 16, maybe 17 if it's really big. So that's your entry is here. Here's your stop, right? And then your target is back here. And so this one, did it literally miss it by a tick? Wow, it missed it by a tick. Did it? Or did it not right here? It might have get it. So what Simon recommends is you target the yellow line. It did hit the yellow line here. So if you're trading it and you see it hit the yellow line in reverse, you can just get out, right? But really what we expect is it should probably come back up and test one of these apexes. That's usually what happens. In this case, if you were trading today, there was a seller all day today. So your long trades just didn't reach that far. What we do in the room is we take our very first sell at 10 points. And even though that's not 1-to-1, it pays for most of the risk. So if we take our first, so here, I'll show you how I did it in the room. So I actually took this trade today. So 64.75 is your entry, right? So I'm getting usually if I'm trading my minis, I'm getting half of my trade off right there at 74.50. Half off, limit order filled, right? The rest of it I want to get at least another 5 to 10, but my primary target is usually back up to one of these apexes. If I think there's a chance that it'll go further, I can hold the runner longer, but that's where I'm taking most of my profit. And then the other way to think about it is this yellow line. What they're really used for is targeting. So that is like a perfect hit. And if you could do the same thing to the bearish side, it'd be the purple line. It'd be the purple line that you're targeting, right? And now this is the same no matter what day it's in, no matter, here, we'll find out there. Let's go to like a different day. Maybe one where like it actually gave some rotations to the upside. Did that trap? Yep. Okay, so here's another one. So what happened, right? Balance. If not, maybe bullish. Looks like balance. So balance, balance, balance. We break a power bar. We break an apex, sorry. We used to call them power bars. We try to keep the lingo the same. We're calling them apexes because it's just easier to understand. So you can see that apex got broken, leading to a breakdown, right? The market gets bearish right here. Okay, so at the moment, we should not be thinking, let's buy this. We should be thinking, wow, it's bearish. You know, you might have had a different setup up here, but let's not worry about that. Let's do one at a time. So if we think it's bearish, what should happen when we put in heavy, aggressive sellers under the channel? Well, when it's really bearish, you get extension, right? Continuation. That's not what happened. Look what happened. They got an aggressive seller right after that, back to the bands, right? Another aggressive seller tries to hit. What happens? They get one bar back to the bands. That's not bearish anymore, right? So that's your first hint that it's like, oh, we're mean reverting. It's not time to buy yet, unless you're a really aggressive trader, because it's only going to work maybe 30 to 40% of the time. Instead, wait for the trap back in, right? Wait for that apex, which happens right there, right? You know about the apex right here. Right, when you get this bar, now we know that this thing suddenly appears, and we know, okay, we want to watch that low. If that low gets trapped back in other words, if it goes underneath it, and then in one bar it comes back and closes bullish, we can enter right away. Here it comes, right there. So see how it trapped by like one, here, I'll get really close, I'll show you. It trapped by like one tick, and that's all you need. See that? It's like one tick underneath this one. It came just one tick below, and then closed bullish. It doesn't need the star. It doesn't need it. It's great that it has it, but it doesn't even need it. Would not matter what that bar looked like as long as it's bullish. Again, stop right underneath that bar. I don't know why I can't draw it. Let me just see what it is. So your entry is 89.50 probably, because you'd get in one tick after that on a stop order. Your stop is 74.50. So that's the average, 15 points, right? And then what's your target? In this case, you've got, first of all, the yellow line is always a good place, and then 10 points, so 92.25. Other than that, there's an apex right here, right? So if I see any signs of selling above that, I'm just gonna get out. Like if I get 15 points on these, I'm super happy, because again, keep in mind, 70% win rate, right? 1-to-1 on a 70% win rate, you are doing great. Right? You don't actually need 1-to-1 if this is all you're doing all day. So I'd already hit my 10 points, and then you can see right here, they're running into the primary target. Most traders, especially if you're trading, like we help a lot of people qualify these prop funds. If you're doing like a trailing drawdown, like with any of the prop trader accounts, you just take your order, you're happy right here, right? You do it with 2 contracts over and over again, just grind these out. Don't even worry about the runners, because you don't want that trailing drawdown to hurt you. Just take it right there, right? If you aren't doing that, and instead, getting your giving back profits doesn't hurt you like it does with a trailing drawdown. Like if you're trading a cash account, or if you're trading a what's it called, the funded accounts. Sometimes, like with the Apex Trader funding, the funded accounts don't have the same rules for drawdown. So once you get a funded account and you build some equity in there, you can actually stop taking profits so quickly, and eventually you can take runners. And you can see this one actually ran, right? So now it got bullish, and there was never any sign. There was not even a single Renko bar that closed bearish. So there was, you could just take all of it, but if you had any reason to hold runners here, you'd still be in. And that's where you'd probably get out, is the first exit, because again, remember, it's probably mean reversion, right? What happens in mean reversion when you get outside the bars? Well, you probably are going to come back to the mid. That's just normal. Most of the volume by the end of the day is going to happen inside of here. So if you're out here, the only time it's going to go higher is if it's literally got a ton of momentum, building momentum. It needs more momentum than it needed to get from one side to the other. It needs more momentum than that to stay outside. So the moment I see some kind of weakness, I'll just get out. Now does it mean it has to go down? No, it can continue, right? And it might trigger again. So let me just see. Let's just see. So we're going to take this one. This one's done. All right, there's an apex, right? Does it trap back in? Right there. Look at that. Another one. Oops, that's not quite right. There we go. Oh, did it miss it? I can't tell where the low in this is. It might have missed it by a tick. If it doesn't cross it, it's technically not a trap back in. So this one, it looks like it just missed it, and so like there, it just didn't trigger. You don't lose any money. You just missed the trade, right? Because it didn't quite trigger how we wanted it to. And again, there's other ways to catch that, which I'm going to show you in a minute. But for this here, so this one's done. So for this primary, because you don't. So when there's this is a big question that people have. When there's, like, new members, when there's a big extension, right? Like, let's say you're trying to buy here, right? And it didn't trap back in. Like just like what we saw. It didn't quite make it, and it goes. What we do is we're like, I got to get long. Like, you get FOMO, right? You want to get in. And so you're like, well, this was a good buy back here. Why don't I just buy it here? No, don't do that. Don't do it. Once it is extended to your target, and especially if it has another rotation higher, I'm not saying it has to reverse, but I'm saying that, think about it this way. If the market comes all the way back to your entry, is it really that bullish? Like, if it comes straight back to your entry, are you FOMOing into like the most bullish stock or the most bullish chart ever? No, you're FOMOing into, at best, a balanced chart that went all the way to your target, went beyond it, and then came all the way back right away. Like, I don't know, right here, right? Like it goes here, look. It's the same exact, the only difference is that this one got further away, but look, this is the same exact thing, right? Here, goes all the way up. Imagine if it came all the way back to here. Would you be bullish? Like, I'm personally not auto buying that. If it sets up with another trap, sure, but I'm not going to reuse, I'm not going to reuse the line that was valid back here. How the heck? Oh, I see. I'm not going to reuse this line here. I'm not going to reuse it over here. That's not a thing. Like, that does not make this a buy. Do not do that. Because what you're doing is you're letting the move go, and then when it comes when everybody's out of the move and it comes all the way back, now you're the last one getting long. And most likely it actually set up short up here, and you might just not have seen it, and then it breaks down. Because if you see, like, see what happened, we fell underneath the channel, right? And we have not trapped anybody. There's no aggressive shorts here. Purple is not aggressive, only orange and stars, or else green and stars for the other way. So there's no aggressive bars down here. There's no sign of aggression all the way through here. This is the first sign of aggression to the short side. And see how they can't get behind him? Look, if you want to know, is this ready to turn or not, and you have the algo, find a star or an orange or a green bar, put a line behind it. You know it's not bullish until they get over that. You know it's not bullish until they get over that. They have to beat him. Otherwise it's bearish, right? So finally, they come back up. Okay, now you can start looking for mean reversion trades, right? This one was not. It's the most recent one. All you need is to trap one aggressive seller, and the momentum can stall. It's not necessarily going to high of day, but you could take a mean reversion trade, right? So there's no trade here yet, right? We missed the V. Make that very clear. I know there's a star here. There's even a 2-bar combo, a very aggressive trade entry where you take a purple or a pink bar followed by a sign of aggression. It's not wrong. It's just I'm not that aggressive. I don't take those trades because I can't handle the stops all day long, right? You need to be really good to take every single one of those, and I'm just not that good. I would rather stick to the entries that have like a 60% win rate or higher. Like, my coach can take those and he's good at it, and I never know when to do it and when not to. Oh, this might never come back. So once it's gone like this and it's gone beyond the range of the channel, I'm not this, like I said, this level is no longer really useful to me. So let's see if I don't even remember what happens here. So see how you don't want to just buy this, right? You don't just buy that. Like, it might work, but you don't do it for no reason. Okay, so did this one drop? Nope. And so you can see the great thing about this trade is it only sets up rarely. Oh, there's one. Now this one's close, right? There's a problem with this one. The problem with this one is that you've already reached the other side, right? So it doesn't mean it can't work, but you have to believe what you're asking the market to do here is you're asking the market that just came from the top of the channel and came all the way back under the channel. You're now asking that market to go back up to the top of the channel, right? When does that happen? It happens when range is expanding and it's clearly balanced or bullish, right? Does this chart look bullish? I'd say no, it does not, right? We have a highway up here. These guys appear to like be trapped now. Is there any reason to think that like we're going straight back up here? No, especially after this, right? Check out where that was. Like, just like draw a line. If you're not sure, is this bullish? Like, draw a line here. That's old support, right? What happened last time you were there? Oh, an aggressive buyer showed up. That aggressive buyer is probably stuck. Chances are, best case scenario, we get back to 1145.50 and we probably stall. Best case scenario, right? Now, had you gotten a trap back in here, it would be fine because this hasn't gotten to the opposite side, and mean reversion doesn't need it to be bullish. It just needs it to be not bearish. Well, the fact that we've already gone to the other side and then came right back again, and then we got to the behind the channel, right? We didn't bounce here. We're not buying it at the purple line. We're trying to buy it under the blue line, like dangerous territory, right? Where if it's bearish, we're gonna get totally smoked, right? So it doesn't mean you can't buy it. It doesn't mean it won't work, but realize that if it gets back up here, if you're gonna buy it, if you're gonna be aggressive and buy it, you need to make sure to take profits up there. I don't even remember what happened. Let's see. Oh, look at that. It gets to like 11:45.50 and then just turns around. So would it be worth taking? Like, I mean, my coach would say yes. My coach would say you're leaving money on the table if you're not taking that because it's valid. Because he's aggressive, and that's one of the reasons that I'm the student. He's the coach, right? You'd get in at maybe 29.50. Your stop would be 1 point under 12, so like 11. So I mean, that's a hefty stop, right? That's not a small stop. It's actually really big. And so, are you even getting 1-to-1? You are potentially getting 1-to-1, right? You are. You're getting almost 2-to-1, 29 to 52. So, you know, and like I said, I would have been out of there at 45.50. So for me, I'm getting 1-to-1, barely. But that, you know, you'd have to decide whether or not that's good enough to just take all right here. I would probably skip it because I'm just not that aggressive. But like I said, my coach would probably tell me that's not optimal. That if it's valid and you have a 1-to-1 target and you know that the trade setup is working 70% of the time, you take the trade. His analogy, and I think it's a good one, is like you're in a poker game, right? You're playing against other players that are better than you, and you know that, right? What's your optimal decisions there? It's to play only the very best hands and to play them very, very mechanical, right? Like raise with the big stuff and fold the small stuff and just play a good game. Will you get bluffed out? Yes. But will you have a chance of still winning? Yeah. You know, you might not be able to outsmart or outplay the big players, but you're going to occasionally steal some blinds, right? Or not steal them, I guess. You're gonna raise with king, and they're gonna fold, right? So here, this is like your sevens or your eights, right? Like pocket eights. Like I don't want to fold pocket eights because I know that they have a good chance of doing something, right? But in my experience, when I take pocket eights and they make me fold on the river, I can tilt, right? So for me, I've convinced myself that if I have any doubt that this is going to be worth it, I'm better off just skipping it because I know there's going to be a good entry in the future, right? And it's definitely something I'm working on, but when I see this at first, it's just like, yeah, I don't know if that's going to work. But like I said, for 1-to-1, it does. And that's a good example of why this works so often is when I say works, all it needs to do is this. That is a win. Like, I'm sorry, but, you know, I've been trading for 6 years, and most of that time has been trading momentum. And so, like, when I look at a chart like this, like, a win for me was buy this and sell that. That's what I thought, like, a win was, right? I was like, oh, wow, I'm not very good at trading because I can't buy down here and sell up here. Like, what I didn't understand is that you don't actually need to be the buyer. I mean, we actually probably got set up down here, but is that a trap back in? Yep. Oh, maybe not. Let me see. It's got to close back inside of the range of this one. Oh yeah, no, it's good right there. So we're good here, but even if you didn't get this one, the point is that like if it's set up right here. That and then you only risk 15 points. and you get 20, and let's say that setup is 60% accurate, you're a winning trader if you just keep doing that, right? My mistake in the past was if I missed this down here, right? If I missed this entry and then I'd get another trade signal somewhere else, I'd be like, oh, we're too close to this resistance, so I'm going to skip it. Or we're too close to this resistance, so I'm not going to take it because I don't think it's going to work. And then it works, and I'm like, oh, well, this one's way too close to resistance, so I'll wait for the next one if it pulls back. Oh, wow, it's going really high. I guess I have to buy it. And then you buy it, and then you lose, right? Because like you hesitated and finally just got FOMO and didn't really have a plan for how to deal with that. So what's changed for me, what's turned me into a profitable trader, isn't doing anything miraculous, honestly. It's just start with something simple like a trap back in, right? And just only take it when it does that. And it doesn't have to be at the bottom, right? Like it can be literally anywhere as long as it's not bearish. As long as it's not bearish. So now these do not always work, right? You will get stopped occasionally. And if you want to know when you get stopped, it's 2 times. When the market has been really bearish and you're buying anywhere but down here. So for instance, this is, hi Cat. This one is this pink bar here, buying that. See, it is a trap back in. It's valid, right? I can't argue with that. It is valid. It trades slightly underneath and comes back up. And it closes back inside of the range of this one, right? I can't argue with that. It is, if all I saw was this, I'd say, yep, that's valid. The problem with this is that if you look at the range of what the market's been doing recently, let's see, how do I get this to there? So if you look at what the range of what the market's been doing recently, chop, 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 rug pull, comes back up, chop, 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 up here, not down here, right? If you buy this, your stop, remember, goes 1 point where? Behind the bar you got in. So what's going to happen normally is this range here is going to get re-auctioned, right? That's just normal. Why? Because you got this big push down. They're going to want to know whether or not there's still buyers down here before they go anywhere. The market doesn't like to just take off. Sometimes it does do that, but usually it needs like news or something, right? To just like reverse and never come back there. Usually if you get rotation up, chop, 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 the next step usually is either continuation of the initial move, right? Or come back and re-auction this, but fail to get under this. But in both of those scenarios, you are coming back here, right? So if you can identify the difference between a setup here and a setup, this one, like I said, is unusual to get them at the low like this. So I'm going to, you could even skip this because it's too bearish and you'll do fine. You don't need that. You don't need those actually. Where was the other one that we were seeing? Like this. See how this is actually, so look, we got down here. We came all the way back up. Look, this is balanced now. See that? We're no longer bearish. Everyone see the difference? It was bullish. It pulled back. It got underneath here. We got above the aggressive seller, right? We got above it right there, and we traded higher. If we come back and do a trap back in here, it's actually bullish. So you can buy up here. So when it traps back in here, that's fine. It wasn't that bearish here. It's totally different, right? And then you go higher. It's totally different than, where was it? This. It's like the entire chart is flipped over, right? It takes time to see that, right? And it's okay if you take these and fail because, like I said, with a 70% win rate, you're gonna be fine. But that is one area where these do fail. And if you can see this without any other indicators, great. I personally have added additional stuff to cue me in when this kind of thing is happening, so I don't have to think about it. I just know extra rules about when to do it and when not to based on other signals. But you don't need those if you can see it, right? You don't actually need it. Whoops, what did I do? The other time it does not work very well is when the market has zero volatility. Let me go to overnight. That's usually where this happens. Chart end. Okay, so when the market, actually it wasn't even that bad. When the market is stuck inside the blue to the orange, if it can't get out of there, don't even bother trading it. And the reason is, well, on this time frame, what you would have to do is go down to a smaller time frame, and then you'd be able to get the setups more clearly. But with this time frame and this volatility, the problem is if you think about it, the what's happening here is the market is evaluating an area like in here, let's say, right? So if it's balanced, what we really want is we want to be getting long down here and short up here, right? And then to the to ride it to the middle of the other side. The problem with this setting, this level of volatility on the 24 tick, is that your entries are after that bullish bar closes, right? Well, that's already in the middle of the bar of this rectangle. You're not getting long on the edge. You're getting long in the middle of the range. See that? You're not down here. You're in the middle, if not higher, depending on where this trap back in happens. Like, I don't think this was one, but let's just see. Did this too many lines? I can't see it. No, it didn't. Oops, I got the wrong tool. It didn't quite trap back in. Oh, maybe it did. Oh, it might have. I can't tell if I got that in the right spot. This is too thick of a. It might have, right? Let's say it did. Let's imagine that it went one tick lower, and you know, if you're watching it live, you would know. You'd see it. But let's say you got long there. Your stop needs to go one tick below here, right? Now this one worked, I know, but you're buying it here, and your target, like I said, is normally the yellow line or the last apex. So here, you'd be lucky if it gets you back here. And see how it does do it. It does. But it was a scary ride to get there, right? Does it get you to the 10 points that we usually like take profits at? Yes. So again, is it valid? Yes. Would my coach tell me to take it? Yeah. Am I personally going to take it every time it sets up like this? No. Not if it's chopping back and forth and this took 2 hours. See the time down here? This is 15 and this is 17:15. Right? So like 14:50 to 17:15, it hasn't moved 24 ticks. It's moved like 16 points in 2 hours. Like, yes, it might be a valid setup, but do I really, how often am I gonna actually get more than 10 points? Like, I don't know. Probably not 70% of the time. So if you can avoid this, the chop, no volatility. And then if you can avoid buying it when it's in a bearish consolidation, like it's got to go underneath here. No, that one was fine because it got back to here, so it's okay. I'm looking for ones where it can't get back. It's bearish here. It's bearish and it can't get. You wouldn't know here. You wouldn't know if it's set up here. You could get stuck there. But here, if it's set up right here and you can't get into the range of you can't get back into the channel, that's not bullish, right? If this was a trap back in right here somehow, I'm not taking it because I should be looking for shorts on this chart, right? They're just gonna be easier. They're gonna work better. Okay, speaking of shorts, let's talk about the short side. The exact same trade also works on the short side. The problem with the short side, and this isn't just with the trade and perform entries, it's not just with the trap back in, it's literally everything short, right? No matter what your target is, no matter what your setup is, anything short, let me go back to the live. Anything short is going to be more abrupt, right? The way that the short sets up, if you think about like how the market moves, it's actually not inverse. The accumulation that happens before a market starts going higher is something that looks very different than what a market looks like before it's about to get rug pulled. And recognizing that has really, really improved my trading. The number one piece of advice, basically, that I've really taken to heart is that if you want to decrease your stops and you're really struggling with having too many stop outs where you're not taking the trades appropriately because you're scared of the stops, try not taking the short setups and see how you do. Which is weird because it's a bear market, right? You'd think that shorts should work great, and they do, but you need to be a successful short seller. You need to have a bit more conviction and confidence, because a lot of times there is a little bit of like a stutter step manipulation move right before the big drop that basically gets everybody who's short out of the market. And sometimes those happen in a very, very short period of time. So I can show you this one. I think was okay. Yeah. So this was a valid trap back in short, right? It's the exact same thing, only in reverse. You can see that the chart itself is bearish on the higher time frame. We've come up to the top of the channel, which is where we want to be getting short in general, right? Above or at the top of the channel. We put in an apex here, right? Put in an apex. We would know about the apex 2 bars later. Then as we approach the apex, we're looking for them to overtake that apex by at least a tick and then close bearish, which happens right there. And that is our trigger to short. The stop is still the same. It's 1 point behind the entry bar, right? I don't know why that tool's not working right now. Did it like turn black or something? Why is this not working? Oh, it's working here. Okay. Yeah, one point behind is where and then your entry is probably 1 tick after that if you stopped in. Otherwise, it can technically be anywhere in the bar's range if you want to wait for a retest. That's okay, right? It just has to happen in the very next bar. So, for instance, if you didn't immediately enter here at 63, and this is, oh fuck, this is ES. It's okay. It's still the same. It's just that rather than 15 points, the average stop is going to be more like 4 or 5 points, and we're going to take profit at more like 3 points. So, but all the setups still work the same. Sorry about that. I didn't realize I was looking at. Have I been looking at ES this whole time? No, we must have flipped, right? I don't think I was looking at ES the whole time. Maybe I was. That's okay. If I was, no big deal. I swear we were doing NQ earlier, but it doesn't matter. The point is still the same because it's the same exact setup. It's just that the numbers will be different, right? Everything else is the same. So they look totally the same. It's just the actual expectations is still only 2 bars. But yeah, that's not going to be 10 full ES points. It's going to be more like 5 full ES points because this is the 8 tick. We also trade on the 6 tick if it's going really slow. But anyway, the trap back in here, come here, would be valid, and you would you'd be targeting the purple line down here, even if you're trading NQ, and so most of your risk should be off right there. And then if it continues, great. Right? That's fine. On NQ, let's just see what it looked like. 24? Yeah. On NQ, still valid. So NQ, same exact thing. Stop goes 1 point behind, entries like one tick ahead or else anywhere in this bar. So what I meant to say earlier is like, let's say you saw this but you didn't have your order in yet, right? The very next bar, if it retraces any of this entry bar's range, you can sell any of this. So what my coach will often do is he'll get in half of his position here at the close, and then if it starts to pull back, he'll add some more as it goes back, and then leave his stop here for everything. So and then you can take profit just a little bit more aggressively. And then, like I said, our target is 10 points for the first one, and then either the apex, which is here, or else the purple line, right? So let's see. I think it both get hit. There's purple line, there's apex, right? So there, it doesn't mean you have to be out of the trade, but if you're going to stick with this trade, you have to believe that you're getting some sort of a breakdown here, and that might be happening, right? And if that's your read, then that's fine. But the trade itself is not meant to take you to low a day or high a day. It's just meant to get you to the opposite side of the channel, right? That's all it's intended to do. Let me find one that doesn't work because I want to show you how sometimes the shorts are just now. Like today, the shorts worked really well because it was like there was a seller in the market all day long. But I just want to show you how here. So all right. Here's an example of what happens on the short side a lot. Now, this is not a good place to get short, but imagine that this was at the top of the channel where we really want to be getting short. So we see an apex. You might get triggered short right there, right? If you want to aggressively short. That's a really aggressive short, by the way, because you're not in the right location. You really want to be up here. But just for an example, because you see this happen even up there on the short side. It doesn't happen very often on the long side, but what you'll see is you might have gotten your 10 points off, which is great. But if you tried to hold, it's going to come all the way back, and it's going to barely touch behind. Oh, maybe it didn't. Oftentimes what it'll do, I think you might have been safe. What it really loves to do, and this isn't just NQ, it's ES too. It loves to come back up here like 3 points behind and then roll over again, right? Really, it doesn't do it on the long side, but on the short side, it just loves that price action. See, this one didn't trigger at all. Let me find one that... Here. Okay. Here's a good example. This is perfect. Okay, this is exactly it. All right, so let's say you thought this was neutral to short, which like I don't necessarily agree with, but let's say you did, right? You've got a valid entry here with a trap back in. You've got an apex. You traded behind the apex and came right back down again. You could short that as long as you thought it was bearish. Maybe you just thought the whole day was bearish and you're only selling and you're going to sell every single one. Cool. Sell it, right? Your stop needs to go 1 point behind this, right? So what ends up happening is you get your risk off. In other words, you get 10 points on NQ or like 3 points on ES, but it doesn't actually meet your target, that natural target, that purple line. And instead it comes back up here to collect more liquidity. And then the next move down is going to be explosive. Watch. So you get stopped out. You have to let your stop take you out. If you don't, you will literally be kicked out of the room. Not for doing it once, but if it's something that you just can't learn to like let your stops protect you, Simon won't work with you. Like he will help you, but if you can't figure that out, you're not going to be able to be profitable, right? It's just not going to work. You can't just enter the market without an entry, and you need to have a predetermined stop that you respect. The cool thing is, and the way you learn how to leave your stop alone, is that when you get stopped out, but you're actually right, you'll get re-triggered in. You'll get triggered in to go short again, and you'll get the breakdown more often than not. It'll still trigger. You'll still know, you'll still get it. It's just that you have to respect your stop. You can't just hold no matter how high this goes until it rolls over. You need to get out and wait for the next entry signal. Right? Because, like I said, and that's just something that's unique to the short side. It's just the way the market works. That's the best I can explain it as. It's the short side is just different. It's abrupt and a lot of times kind of like manipulative. Like they like to steal more liquidity, and then very, very quickly exit that area. Whereas the accumulation on the long side, it just looks completely different. Here's another one. Here's another one. So if you're going to take every single one of these trap back ins to the short side, you will not get a 70% win rate. Let's put it that way. So Apex, right? Whether or not you should be getting short here, let's not even worry about that. But that is technically a valid short, trap back in, right? It went behind it, and it closed bearish back inside the range of this bar. So and so that looks good. This one technically hits the target, right? But a lot of times it won't. The only reason it did is because this apex is actually lower than the target. So if that apex is up here, it probably doesn't hit the target, by the way. But let's just say you thought it was going lower and you held your runners, which is fine, right? Totally cool. You can do that. The problem is when it comes back up, it's probably going to it's going to steal your stop, right? And then what's going to happen? A bar or two later, it's going to trigger short again, and you have to get back into it. You have to have that conviction to know that you didn't get stopped out because you were wrong. You got stopped out because there was liquidity back there. The reason this happens, it's this. See that? There are stop orders up here. And so they try to steal this and flush, and they run in, they get absorbed. They can't get it lower. So the sellers need to step away and let the buyers get trapped up here. And in the process, they get all of this liquidity here. It doesn't look like much, but that's all it needs to do is get behind this line. And everybody gets stopped out who was short from here. Now, when it triggers short, now everybody has to execute their order, and you finally have enough momentum to get it going, right? So the cool thing is there are ways to know the difference between this and this. There are ways, and so that we know. So you don't have to deal with this as long as you learn some other setups. But realize that if you're going to use the trap back in setup for the short side, that you're going to run into this a lot, especially if you're getting short anywhere but behind the channel like this. Like with a bar that doesn't interact with the orange, the chances that it's going to get your stop's going to get swept increases significantly. So what I'm saying is if you're getting short anywhere under this orange line here, so see how, well, I should say a bar that doesn't touch it. So this bar, this one technically does touch it, so I can't really critique that. But that's one way you can immediately improve your odds. You'll miss some, but the ones that set up here are going to be way better, right? The traps like this that are way up here above are going to be way better than the ones that trigger in the middle of the range, particularly with the short. Because like I said, if you're buying, you like this as long as it's bullish, right? You want to see it consolidate, accumulate, can't break down, and then run, right? That's how the long side works. Look, if you find a long, that's what it looks like. Chop, 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 get tight, get tight, get tight, break out, right? That's how they work. The short side that's not how they work. I know it looks the same, but it's not. The way it works is it has to steal these stops first. Sometimes it has to steal this. Sometimes that's got to come all the way back up here. It'll go, right? That's how the short side works. It's literally just different. So that does take some practice, and the easiest way to deal with it is to start long only, because the longs work a ton. Even in this market, the longs work great. You might not get the 100-point moves on the open like you might with the short side, right? But you're not going to take the number of stops as you do on the short side. And like I said, that's particularly with the trap back in setup, which works so well long and just like kind of good on the short side. If you want to know the numbers, we constantly the team, the members of the team that enjoy data collection and data analysis, which to be fair is not all 25 of us or whatever. It's probably a handful of us that kind of enjoy, researching signals and determining whether or not we're using the most optimal signal, right? Like those of us who like do the work behind the scenes, we are constantly looking at what it is currently backtesting. If you took every single one of these setups without any other filters, how you would do, right? And it's important for us to see that because like we don't want to be presenting setups that like aren't working very well, right? I mean, not only are we personally trading them, but we want to, and that it's important for confidence to have a sense of how often they're working. But if we're going to present them as high odds setups, they better still be high odds setups. So in our research recently, the longs, like I said, are coming out between like 70 and 73%. I think, like I said, the last 2 weeks it was about 72%. If you just did long only and all you did was just took every trap and you did no filtering beyond that, right? You didn't even worry about whether or not it looked bullish or bearish. You just took them. So you can actually do better than 70% if you just did a little bit of filtering, like I just explained about knowing when it doesn't work very well. If you add in the shorts, so you take every single long and you take every single short trap back in as well, so you take both directions, your win rate drops about 1/4. So the shorts work about half as well as the longs. So another way to think about this is if you're used to taking 3 stops a day, and that like what we say on process, right? You do everything right, but there's a decent chance that throughout the day you're going to take 3 stops. If that's normal for you, and you're doing the long only, like you're trading just the trap back in setup long only, and you've been grinding it for a while, you know what it looks like, you know the difference between a valid setup and an invalid setup, but you know nothing about filtering or how to read a market. You just know when it gets behind and it comes back in, I just get in, right? But I only long it. What if you were normally getting like an average, let's say, of 3 stops a day, let's say, which again, I'm not saying it always is 3 stops a day, because sometimes you only get 3 signals a day, in which case it would probably be 1 stop in that case. But let's say that it was an active day where you had quite a few setups. It would be pretty normal to take 3 stops in a day. On the short side, you're probably going to take 5 or 6. Right? And for me, that was hard to accept, right? I didn't like the idea that I was being super patient, waiting for this high odds setup that only shows up once in a while, at least every day, right? But not always more than 3 or 4 times in a day. And then if you're doing long only. And then if I wanted to add the shorts, I needed to accept that for every one of those longs that's working, I might have to actually take a stop short. But the good news is that the vast majority of them then will trigger you in again and be valid again and work very, very often, right? So even though it's a stop, as long as you're confident about the direction, you can still get the move, right? It's just that you have to take it a second time. And like I said, that has just been a very difficult thing for me to learn, to be confident enough to get stopped out and then see it immediately come back and know that I have to take the trade again. Otherwise, I shouldn't have taken it the first time, because the likelihood is actually, if you're taking it on the short side, the likelihood is that many of them are going to get stopped out, and then to get it to work, you're going to need to try it a second time. I wish they were all like that, because then I could just wait for the second one, right? But unfortunately, sometimes they do just rug pull it. So you just kind of have to commit that if you're going to take the short side, it might take you 2 tries to get the trade to work. And many of us are just like, nope, can't do it, right? It's tough. So the solution then is only take the long setups and practice taking that second try, because every once in a blue moon on the long side the exact same thing will happen. And you must take the when it triggers again right away after getting you stopped out. You really do have to take it, because the likelihood is it's actually gonna get to your target, but like the likelihood is actually higher than 70%. So you do need to practice getting those. Is this set up? It already hit my target, so no. But it almost is. If it wasn't for the fact that it got all the way up here first, it would be a valid setup. But it already got to my target, so no, not for me. But what was I saying? Yeah. So let's say I bought this, right? Imagine I bought this because it's a trap back in, and then it stops out. But the very next bar, after trading through my stop and taking me out, because I have a hard stop all the time, it comes right back and gives me another trigger back in again. I have to take it long again, right? If this was good enough to long, then getting stopped out and getting literally immediately, the very next bar, getting triggered back in is better when it comes to like win rate than this one immediately working. And I know that's frustrating, right? But that is just the way it works. Thankfully, on the long side, it doesn't happen very often at all. But it's really, really important to practice that and to be good at that before you even think about taking the trap back in trade on the short side and some of the other short setups, because on the short side, it happens a lot. So, for instance, on the short side, what might have happened here, so you got this apex that was never broken, right? Then you had this apex, and this is your entry, assuming it traded one tick behind it. Then your entry is here, right? And it works. What will happen on the short side is this one will print, the very next bar will go lower, and then the bar right after it will go. And so the only solution, if that ever does happen, is just to get back into the trade. And like I said, I'll find here. Let me find one that does it on the long side. It does happen. Just not very often. But on the short side, it literally happens every day, like all time. And those of us who trade on the short side know this and know how to deal with it. So here's one. You get long, right? It's technically not. This is a perfect example of one where it looks pretty bearish. I probably wouldn't have taken this, but because there's nobody trapped here, there's no bearish aggressive traders down here. But they got trapped until here, and he doesn't get trapped unless we get above this. See that? So truth is, I would not see this as bullish. But let's say you just didn't know that, and you just knew trap back in, right? And that's okay. You'll probably be right 70% of the time on the long side. So when it doesn't meet your target, I think that went like 9 points maybe. Was this today? Yeah, I remember this trade. This went 9 or 10 points and then reversed. Took you out, right? You're stopped. You're out of the trade. There's no risk on at this point. You must be out. The very next bar, it gives you literally the exact same entry signal, the same algo, the same bar, just a little lower, right? If you took this one and you thought that was potentially bullish, you have to take this one. Because the likelihood that this one gets you the points back from that stop are actually quite high. Now, this one did hit the target, which is the yellow line, right? And hopefully, by the time this occurred, if you thought it was really bullish here, and you're like, I think this is the low, I think it's going, if you get stopped out immediately, your first thought might be, fuck, I don't think I'm right. This is probably bearish. I shouldn't be getting long. Even if that's the case, you must learn to get back in here. And I'm saying you, but really the truth is I struggle with this sometimes too, right? Still, and I've been doing this for a while. I'm just a slow learner. It's because it's uncomfortable. So the solution is, right, like I said, the problem is you're maybe emotionally getting involved here, or maybe just mechanically getting involved here. And then you get stopped out and you think, I'm obviously wrong because I got stopped. And then it comes back in again. You must get back in. And then the solution to how do I deal with that, feeling like I must be wrong, yet I have to buy according to the system, is you take your entire profit either at the apex of however high you got on the first one, right? Just get all of your money out right here, or at the yellow line. So if you want to do the apex, that, in this case, the apex is below the yellow line, so that'll be your most conservative exit, would be right there. And so that is your exit all. And you put a limit order there, and as soon as it hits it, you are out of the market. And you're out. Right? And like I said, in this case, if it would have hit the yellow line first, like here, the yellow line came under it, and I would move my sell limit sell to the yellow line. Right? Because I want out of that trade, but I must be in it because I committed chips here, and this one is a higher odds trade. And that's just math. Like that, once you do these back tests, that's the only way I was able to learn to do this, is I needed to see the back tests. I needed to see if this one fails but it comes right back again, chances that this one gets the yellow line are really high. Whereas this one, chances to get it yellow high are actually pretty high too. But this one, really high. What are the chances that this is going to go to the high? Not very good, right? And that's where people get confused. Is they think, since this wasn't the big winner, this must be like the lottery ticket. No, sorry. Not that kind of a game. We are looking for 15 points, right? Sometimes you get more than that when you're on the side of the market with all the momentum. That is not your primary goal, to catch, 10 ES points or 50 NQ points. That's not the goal. The goal is to get as many 10, 15 point scalps as you can, as long as they are on process and you're getting them you're doing it in a valid way where you can repeat that over and over and over again every day, and your risk is limited, right? Because we're only limiting our risk to maybe 16 points most of these. So so that's how that works. Like I said, if that's uncomfortable, getting in here, getting back in is uncomfortable, and having to adjust from here, thinking I think this is going back to the high, to oh shoot, I got stopped out and it came right back in, I guess I have to buy it. And the solution is get everything out right here, because while it might be bearish, I should get my target, right? If that is hard, and I found it hard, then the short side is, you're probably not ready yet to trade mean reversion to the short side. You can still do momentum to the short side if you know how, but the mean reversion trades like this they're just gonna screw with you. Like, look at this. Short, target, not met. Takes you out, immediately back in, hits target. Does not stop you out, goes lower. So which one of these do you hold runners for? I'll tell you. You don't hold runners on this one. The standard trap on the short side, you don't hold runners for. You wait for the trap to get stopped out, and the re-entry is the one that you hold runners for. If you're really good, you can just not take that and be patient enough to see if this develops. Sometimes it will just drop, and you gotta not tilt when that happens if that's your process, right? But that's how you start taking shorts. Otherwise, you do what my coach trains the more aggressive traders to do, and that's just take all of them. But take the if you get stopped out,
you basically trade it with half size because you need to be able to get back in, right? Okay. Let me take a quick break, you guys, and just grab some more water. And then I'm going to show you some more advanced trades. This is going a little bit longer than I wanted, but that's okay. I know, like I said, there's been a lot of interest from new traders in the room about what I'm trading. I will tell you, the majority of my trades are trap back in trades, the trade I just explained, on the long side. If you see a trap back in trade on the long side, I'm probably in it, unless the chart looks like this for the last 2 hours, or the chart looks like this for the last 20 minutes, right? If it doesn't look like that, or if it has huge rotations with increasing volume, I'm not buying this personally. That's, like I said, is it valid? Yeah, but we talked about this already, that chances are, well, first of all, this one you have to get stopped out and then try again. Get stopped out, immediately comes back in, right? And then this one is one of the rare situations where it actually does not hit this target, but it does hit the apex. See that? So here the apex is below the yellow line, so you are exiting everything right here. It's a small trade, but chances are you're going to get some of your stop back if you just enter this and exit right here. See that? It's below the yellow line, so you have to take it there. What this is I thought it was bullish and it's wrong, so I better try to get a piece of that stop back, because that was not a very good decision, right? So you get long here and you get out right there 10 points later. And like I said, this stop was only 15 points, let's say. So you're now down 5, which, like, net, right? And that's pretty cool considering you technically made a mistake with your read, thinking that this is bullish. But when you go all the way to the opposite side and then they don't even stop in the middle, but instead they just rip right through it and they cross an apex, it's probably expanding range and it's potentially very bearish, right? If you weren't sure if it was bearish or bullish, you could just look to the left and see where the market has been recently and see if anybody's trapped up above you. So I'll show you how you would do that. Oh, where is that? Is it here? Yeah. So if you weren't sure and you're like, this is dropping, you're like, wow, do I want to take a trap back in here? Do I want to be long? Well, mark off where they got stuck. So this is the aggressive seller, right? The star. We're going to go all the way to the left, and we're going to see, did buyers that were aggressive get trapped here or higher? Yes. Aggressive buyers got trapped. They got under it. Oops. What happened when they tried to come back into that range the first time? Rejected. Where were they rejected? Right here. This is just support resistance. You could do this on the profile if you want to be a little more clear, but one or another you'll see it. Come all the way back. They got to that resistance and they rejected, right? They got into there. They got over this one, but they couldn't get over that trap trader. Gets rejected. Now does it look bearish or bullish after watching all that? 14 slip. Now it shouldn't look all that bullish anymore. Once you see what's actually happening in that zone, you should see that the likelihood that we come back up here again very quickly is not very high. Yet we have volume building and price dropping. So range expansion to the downside. Probably bearish. Right? Now, it doesn't mean you can't buy anything. No, I just wouldn't buy down here. This is probably going to get tested. That's all that means. So all I have to do is mark off the V, right? Whenever you have this V bottom where I'm not trading, I don't get long here. I have no way really to get me long here, and that's okay. I want to see that traded through or tested before I even think about longing. So I at least need this, and I prefer it to get in there, but it doesn't always. Okay, good. Now that it did that, now I can look for mean reversion. Is that a trap back in? I'll erase the lines. So we came down. We went through here. We went through that previous low. Made a new low here. I know that the bands are tilted lower. Whoops, we went a little bit too far. But this is a valid setup. Valid setup. Where's your target? The last apex or the yellow line, whichever one comes first. Yellow line. 15 points right there. And like I said, it's pretty consistent. These bands are pretty awesome. The channels are pretty cool. So yeah, like look, you don't need it to be bullish, right? Like if you're not trading short, you're gonna miss this, and you're gonna miss. But see, you won't get stopped out here. See, look, if you got short, I might have done this one already, but this is what happens all the time. Get short, get stopped, goes lower. Like, I could look in 6 different spots that look just like that, and we're going to find that over and over again. That same exact pattern over and over and over again. I think we saw this one already too. Get short after the trap back in, get stopped, goes lower. Let's keep going. I'll give you a couple more examples. I'm going to go get water. Need a trap back in on the short side. Nothing. We're looking for apexes that get traded behind. Can't tell. Nope. See, that one did not trigger. See how bullish this is? You just don't short this. That's the solution to that. So let's say that you didn't notice that this was bullish, and for some reason you thought it wasn't. Yes, my friend, it is. Yep. Yeah, absolutely. So, if you thought it was bearish, technically that's valid for a short. I would not take that, but let's say you did, right? Because you're just learning. You get stopped out there, right? Your stop goes 1 point behind here. The only way you're gonna lose again is if you got signaled back in here, and in this case, that's your reshort because it came back. See, it's inside the range of the bar you got short on. See that? So here, if you thought it was short here, this one you have to sell. And that one, does it make it back to the apex? I don't think it did. Some of them just fail. Yep, did not make it. And I can see it's an apex, so it's probably not going lower. And you get stopped again, right? So you might get 10 points off, but you're not going to hit your target. That's just how it goes sometimes, especially on the short side. And like I said, you have to size appropriately so that you can take a few of those, especially on the short side, without getting blown up, because it's not 100%. But if you could, if you could tell that this was bearish on this side and that we've changed behavior here, and now we've gotten on the opposite side. See, look, over here we couldn't even reach the yellow line. That's bearish, right? Well, look what happens. They blow right through the channel. And again, if you're not sure, mark where the other apexes are. That's where the liquidity is, right? To get lower, we actually need to come up here first. Okay, so I don't hate it, right? That might work. It just doesn't this time because it's really bullish. Thankfully, this one doesn't trigger. And at this point, you should probably stop shorting. If you thought it was short and it gets up here and it can't set up short because they just keep buying it, like, yeah, it's not bearish. So just stop shorting it. But like I said, the hard part with the short is that if you do take it the first time and then it gives you another valid entry, you really do need to take it a second time. And that's it just happens a lot more on the short side. So, all right, so let me take a quick break and then I'm going to come back. I'm going to show you, if I have time or interest, I can show you 2 more setups that I am taking literally every day. These are a tad more complex. They're not for beginners on the
TMP Algo, right? The first thing you want to do if you're in the room and you're paying for membership and you get the algo and you want to learn how to use it is you just do trap back in trades all day till till you make your $95 a month to pay for the room, right? And if you're trading even micros, that doesn't take very long. For me, like my average day when I was trading micros was usually around like $200, and that's with a risk of like $100 a trade, right? I'd be regularly making $200 or more. I'm trading 2 minis now, and I'm pretty regularly making $600 or $700 a day, and so like the $95 a month for the room is like, I don't know, it makes sense once you have once you realize the power of the process and the coaching and stuff like that. It's like, okay, I get why this costs money. But yeah, I'm going to show you after you learn that some examples of trades that take a little bit more analysis, but are really powerful for finding. One of them is specifically for finding reversals, which is always helpful. Because if you know how to find a reversal, you also know when not to trade in the opposite direction because you haven't seen the reversal signal yet. So one of them is a reversal trade, and then the other one is a continuation trade, a momentum trade. So for on the days where you have like trend days where it's only going one direction and you're not getting enough of a pullback to get a trap back in, there's other trade setups for getting in with the algo on those days. So I will do both of those in just a second. Give me less than 2 minutes. I'm just going to run to the restroom and grab some more water. I'll be right back. Sure, I'll give you ES Live right now, you bet. I'll leave it up here. Looks like this. So let's look at the 6 tick because it's really slow. We'll do the 6 tick. Now, see the difference between a 6 tick and an 8 tick. The 8 tick is all inside here, and so you're not going to get executed in this. You're not going to execute in the right spot. You're going to end up getting long and short right in the middle of the channel, which you don't want. So by going to a smaller tick chart, the channel itself tightens up, and so now the shorts are going to set up here, and the longs are going to set up down here. So yep, we'll so like technically that would be an example. I mean, it's not actually I haven't been analyzing it, so I don't know if it's a valid short. It's not a valid trap back in short. This was here, and then this is a lower high, and this is a lower high. It's probably valid for an ad, but your stop unfortunately would have to go here, one tick above that, right? Because your actual entry is from this bar here. So if this is 37, 67, 25, like you'd really want to put your stop at like 68, let's say, to be safe. And so you'd want to get short as close to that as possible, basically. But you know what? We've already hit the target. So technically, if it's balanced, we should be waiting for another valid setup. So technically nothing to do. But if they get a little bit behind this and then trap again, right? They fall back down. It's definitely a short then. So we'll see. Give me 2 minutes, guys. I'll be right back. All right. Hey, look at that. It actually is playing out. Sorry, didn't mean to leave the lines on there. So your target would be the purple line. So, wow, close. Very, very close. I am flat because I wasn't watching it, but we can use this to see if it is a valid drawn volume profile setup. So let's take a look. So, like I said, the first thing I'm going to show you is a advanced trade we use for finding reversals. This will work as long as you have an expanding range. It will work best if you have the algo, but there are components of it that you can still practice as long as you have a way to have a Renko chart and draw volume profiles and points of control for the Renko bars like Sierra chart can do. Otherwise, the algo does it very well. And like I said, the hard part is without the algo, you won't have the execution signals. So before I go back to the step-by-step, let me show you, there are a couple different ways that this can trigger. So again, every setup, there's a signal and there's a trigger. The signal tells me to look for the trade. The trigger tells me get in the trade, right? Like I said, for the trap back in trade, we just talked about if you remember, the signal is having an apex and getting behind that apex, and then the trigger is trapping back in to that bar's range within one bar of getting behind it, right? So it wouldn't matter if that was orange or gray or it had a star or anything or a triangle. It wouldn't matter what signal is on there. It's just the structure needs to be thus, right? For this reversal trade, there are two different triggers and they are graded. So the very best trigger on the long side for this would be your green bars. On Simon's, in the room on Simon's screen, these look like little blue boxes inside of the bars. I have a really hard time seeing those, so I've changed mine to be green color bars, and I've removed the boxes, but it's the same signal. It's just a different presentation. I just have a hard time seeing them, so I just switched it. The inverse of that is the orange. They're the same exact conditions, just inverted, right? So, and on Simon's chart, it's a white box on the inside of the bar. And like I said, mine I've just colored orange. Because they're really powerful signals, and I don't want to have to squint. I just want to see it, know exactly what it is. I don't use VWAP actually. I don't. The only thing I would use VWAP for would be to pick a place to not trade. So if you're looking for an excuse for why you don't want to trade in a certain area, VWAP would be a good reason not to take a trade. Because remember, most of my trades are mean reversion trades, right? With the exception of two. Most of my trades, I'm trying to mean revert. So VWAP is a better target for me than an entry point. But I used to watch it, but I found better location signals than that for me. But yeah, what I do like are the VWAP bands, like the variance bands. I really enjoy those for targeting. So if you look at the variance of where VWAP has been, and then you multiply that by 0.5 or 0.618 or whatever you want to do, and you can get just standard deviation bands. But I actually prefer the variance bands. 3 times the variance of VWAP, for instance, that line, either plus or minus, very rarely will the market get beyond that unless it's a trend day. So just having that on my chart can be really helpful if I'm not good at when I didn't have any other way.
if you don't know how to read the profile very well, like yeah, those VWAP variants or the standard deviation lines, like really simplified stuff for me for just like seeing like what's normal when it comes to movement, you know. I also definitely recommend them for anybody who is not traded the instrument they're trying to trade for a very long time. Like if you've been trading ES but you want to try NQ, which I would highly recommend if you have the algo, but if you don't have the algo, NQ is really tough because it's just too fast to trade the DOM. Like I can't trade the DOM on NQ. The algo it's great because the rotations are good and it's super consistent. But without the algo, I'd be totally lost. ES though, I traded for almost 2 years without the algo, just using like Bookmap and the profile and stuff like that. And it's not impossible to read those. You know, it goes at even when it's volatile, like it goes at a speed that I can process. And NQ is like I wish there weren't so many ticks. It's like impossible. It's dizzying to try to watch that DOM. So, but with the algo, the algo does it for me, so I don't have to process any of that. I don't even look at the DOM. All I use the DOM for is to put in my order there. Here, yeah. So if you're interested in learning more about how to get access to the algo, what you can do, I'll give you a couple links actually. So the first thing is, Simon, my coach Simon is the one who runs the room, and you can reach him at this website, or whoops, let me make sure I write this right. This email at gmail.com. Make sure I wrote this right. Okay, and so you can ask Simon for I think he'll do a 5-day or a week pass to the room before you, like, you know, if you're really interested in seeing what it's like, or you're like, you know, you can he'll give you a free pass to the room if you mention that that you worked with me. And so that's how to actually get in there if you really want the experience. The cost, it's currently $95 for regular membership a month. And so regular membership means you can come into the room, you can get all the levels that Simon shares, you get the daily prep that Simon does, and then you also have a zero latency connection to his screen where he's showing the algos for ES and NQ on his screen. And then he's like, you know, throughout the trading day, talking about like what he's doing and you know, sharing, coaching about like execution and what's working and all those things. You also get access to the Slack channel where all of us share our entries and stuff like that, right? If you want the algo on your desktop so that you can just trade anytime you want, you can change all the signals, you can do whatever you want with it other than share it because it's password protected, but you can use it. That's $250 a month for premium membership. And so that's $250 a month total, not in addition to the $95. So it's everything you get with regular membership plus the algo on your desktop. So yeah, that is the cost. Here, let me give you also Simon's Twitter so that you can, because he's got a bunch of videos that explain stuff too. So that's Simon's Twitter. And yeah, he's got a bunch of videos and stuff too, and so you can kind of learn a little bit about his coaching style and all that if you're interested. But yeah, we trade ES and NQ in the room every day. And so especially if you're only trading regular trading hours and you're only trading ES and NQ, like regular membership might be all you need. Most people start there, and then once you start making money, like the $250 a month makes more sense because then you can trade whatever you want, you can trade whenever you want, and you know, you can look at like different tick charts and you can change the colors and all that stuff, and you can back test, which is just amazing. Like being able to go in here and pull up like any day I want and be like, how would this setup work on August 5th? You know, like that is
for me, that was really important for building confidence. I needed to see it personally. Like everyone just saying that they were doing it and it was working was not enough for me. I needed to actually like go back there and replay it and see that I would have been able to do it. It's specific to Sierra. It's specific to Sierra. So the algo itself will only work on Sierra on your desktop. But if you're just a regular member, you can still see Simon's screen without Sierra, right? So you wouldn't even need Sierra Chart as a regular member because you could see the algo on Simon's screen during the regular trading hours every day. So you technically don't need Sierra if you're just a regular member. But if you want to be able to run the algo on your desktop, then you do need Sierra. Yeah, it is required. C++ is just it's a much more robust language than anything you could get on TOS or anything like that. But yeah, most of us are using Ninja to like execute orders, right? But like I only thing I do, I occasionally sim trade with Sierra, like I kind of like their replay mode. So I'll like on the weekends or whatever, I'll try like replaying like a difficult day or whatever on Sierra, but I don't actually route my orders through Sierra. I use NinjaTrader to route my orders. All my orders are discretionary, right? I'm not telling the algo to like buy automatically every time you see a green bar. Technically, you can do that, but I don't recommend it because if you make any mistakes, it gets really expensive. But if you know how to program a Sierra chart, once you have it on your desktop, it's not impossible. I just don't think your win rate would be very good because there are like with just a little bit of discretion, you can make much better decisions than just buying every time a certain signal comes up. You know, there's just so much more to it that you'll do better than like just the signal. Because just being able to see what's going on, you'll be able to read price action so much better than you could without it. So for me it's like it's an execution tool and it's also an analysis tool. It doesn't completely replace. I still have my my candlestick chart on another screen, and I've got like my voodoo range levels and all the other stuff that I use and I've used for years. But if I had to, this is the one tool that I would not trade futures without it. Let's say that. If I'm like swing trading options or equities or whatever, those aren't as leveraged. I'm okay with just a candlestick chart and I'll be, maybe a footprint and a DOM and I'll be able to do it. But if I'm trading leveraged futures, and every tick is, $50, I'm just gonna wait till the algo triggers. I'd much rather have the higher win rate. So I think it's so you do not need to know C++. You don't need to know any of the programming. It'll come if you have the premium membership and you have Sierra, which I think it comes out to like $40 a month for Sierra, if I remember correctly. I'm trying to remember what my most recent purchase was. I think it's don't quote me on that, but I think it's something like $40 a month for Sierra. You have to have, now you can be a non-professional, right? And so you can get that data feed for really cheap. The data feed is small. It's like $7 or something, because you don't even need the whole book, because you won't need the DOM on Sierra. You don't need that. If you're executing through NinjaTrader, you don't need to pay for the full book and all that stuff. You could just whatever the smallest, as long as you can get the futures, right? You just get the CME package or whatever, and it's like, I think Sierra plus the data is like $40, but the data itself, I don't even. It might be like $7 or $5. It's cheap. The data itself is not expensive, but I know Sierra there is a cost associated with Sierra. Let's see. So you better deal for a Sierra, otherwise a procedure to sign up for Sierra. Correct. So I don't have a better deal for Sierra or like any connection. We're not affiliated with Sierra at all, but yeah, I watch the Sierra chart and then I manually enter into trade rate exactly. So the Sierra, I'm using discretion and looking for these patterns, and then manually entering exactly. Um, let's see. Do I know it? So I know enough about programming to. So I took this and added to it and changed it a little bit. So I know enough to like customize the algo, and I've helped a couple other members do that too. Some of them want more, like I did, and others want less. Like some people find like there's like too many signals, and so if you're starting out and all you're doing is taking like the trap back in setup, let's say, I can show you how to like change these so it only shows up like when you need it. So like you don't see all the. If you're not, for instance, like if you're not using the triangles yet for anything, like you can turn them off, yeah. So Sierra is, Sierra is not very user friendly. I'll be totally honest. It's, the interface is, it feels like it's built in like 1995. Yeah. Like I said, there's no better place to build the algo on because of the C++ like skeleton or whatever they have for these alerts, but the like learning to actually use Sierra beyond just like watching the algo it does take practice. There are some YouTube videos on like getting started with Sierra. I believe they did some, but I've seen some from others as well. But I know there are a number of new members in the room that are kind of all learning it at once. And so like the night if you're in a group of people and like, 2/3 of them know what they're doing and then the couple new ones don't, like you pick it up from just watching what other people are doing. And like I said, just being on, even if you don't have Sierra, you can still see the algo all day, as a regular member, even without Sierra chart. So like I didn't commit to Sierra chart at first because I was honestly just kind of overwhelmed by like all the options. It's just really powerful. It can do a lot of stuff that I don't even use it for. And I was really overwhelmed. And it wasn't until I realized that I really did want to be able to backtest it and learn a little bit about like how these alerts and signals really like work, that I decided I should get it on the desktop. But I was doing just fine with a regular membership, just watching it on Simon's chart and executing it on my end. It's a lot of members do that, but the problem is that when it's like right now, like when it's London, he's sleeping, so like we don't have access to his screen. So if you want to be able to trade anytime and look at it when the market's closed and stuff like that, like then you need to have it on your desktop. But it's like I said, it's kind of built as like a graduated thing. Like you can sort of start out by seeing if it's for you, and then if it is, then try regular membership, and then if that works, you can consider learning Sierra chart. And like I said, if nothing else, you'll at least be in good company, learning it with others. Weird. I haven't been looking at NT8, so I'm not sure if mine. What are you routing through? Are you going into are you using Rhythmic data, or do you know what you're like who you're routing through? Because usually the problem, in my experience, the problem has been Rhythmic. Because for my NT8, I'm doing it through a prop trading firm, and the problems are usually not actually NinjaTrader. It's usually the data provider, which in my case is Rhythmic. But yeah, I'm definitely not an NT8 expert. I just use it to send orders. and it routes through Rhythmic. So I have experienced times where NinjaTrader just doesn't work. Usually what I do is I shut down NinjaTrader and Rhythmic, and then I start them back up again, and it usually fixes it. That's the only fix I know. As far as the lag and stuff, it like, because sometimes, yeah, so I don't know why, but for some reason the rhythmic data going through Ninja, it's not ideal. It's you're getting slightly lagged data when you do it that way, but I like NinjaTrader better than Rhythmic for executing orders, so I live with the lag. But I mean, if you're using limit orders, it doesn't really matter. But yeah, I'm definitely not a NinjaTrader expert by any means. And it's, I'm not partial to really any of these. Like I've learned the stuff I need to learn about it, and then I try to like use my time to do the stuff that actually pays me. Like once I know enough about it to use it, I sort of stop digging. So I'm honestly, I'm not a Sierra chart expert either. But I know enough to go from, like I said, from a simple alert system to a more complex alert system, and enough to like help somebody simplify the algo. But yeah, that's about all I know. They do have an online like help book basically, but it is pretty. It's got a lot of the answers to most of the common questions, but yeah, good luck finding it. That's the problem. It's like figuring out what it is that you don't know that you need to learn has been a struggle. Yeah. Cool. No, I know. It's true. Yeah. Sierra's just, I agree. I've been using Sierra for a little more than a year, and yeah, I mean, as long as everything's working okay, it hasn't been a problem, right? But when I run into issues, like like the help desk, you can email them, and I do get a response, but it's not immediate, right? So it's like, if I'm trying to do something and I can't figure it out, like it might be a day before I hear back from them. But in the meantime, I'm like digging through their documents, their online help book or whatever, and sometimes I'll find the answer myself. But it's cumbersome for sure. It's definitely it's definitely a challenge. But the actual like the sign up process is not too tough. There's like, I'm sure on YouTube there's probably a video about like what the process is to actually sign up, because you basically just have to provide like a signed document that says that you're not like professional. In other words, like you're not working for like a big bank or whatever. And like, so you're a non-professional, and then assuming you're like a retail trader, then you're a non-professional. And so you have to sign that. And then you have to do like, you have to choose like which package you want. And you just have to make sure that the package you get has the CME futures, but you don't need anything more than that. You can just get, ESNQ, whatever it comes with. I think it's ESNQ, RTY. It's just the index futures. There's a very limited one that's pretty inexpensive. Yeah. Okay. How to actually obtain their subscription. Yeah. So all I did is downloaded it, and then from there, like just like went step by step through it. Simon did walk me through it, and it was like a year and a half ago, so I don't totally remember. But like I said, since a lot of people in the room do use Sierra, like I may not be the one to answer it, but someone in the room would be. If you got stuck somewhere, and you explain the situation, like someone in the room could probably point you in the right direction before Sierra could. I'll put it that way, because they're, I mean, it's not a big group. Like I think we've maxed out at like 25 or so. So it's not a huge group or anything. It's just, we're just all retail traders looking to be more consistent trading futures. But all of us, well, not all of them, but many of them are using Sierra. So let's see. Nice. Yep. Did we get so? Let's see here. So our last Apex, yep, just got broke out. So let's see if they can develop some volume here. So now see how we've already extended beyond the orange. So now if this is bullish, if it's going to be a breakout, they need to push out of here and they should hold it up here. But if they come back in immediately, it's probably coming back. Yeah, so I have AMP. I have a cash account with AMP that I occasionally use, but most of my trading these days is through Apex Apex Trader Funding, which goes through Rhythmic and NinjaTrader. So it's like one of those prop traders trading groups where you basically use someone else's money to trade. You have to pass like an evaluation, just basically demonstrating that you can be profitable and consistent. And then, like I said, with this system, that is very doable. And they were running a special, and we all got like 60% off or something, and a couple of us are doing that. So, but I've been using AMP for a long time for cash, but the idea of being able to have access to trade a much higher number of contracts than I would be comfortable trading with my own money was good enough to give it a try, because like with the $150,000 trading or funded account, I believe I can trade something like 20 ES or NQ contracts if I wanted to. I don't think I will trade that high, but like in my cash account, I didn't have a big enough account to like even trade more than maybe 2. Because the idea of like having swings of like 2 or 3K a day was just a little bit too much for me to stomach, because I only have like a 5-figure account, and so I think that if you have a big enough account, you probably don't need the prop trader, but if you don't, like, it's a good way to sort of scale higher, more quickly, because otherwise I'd be stuck trading micros, and the fees on micros are just insane, like totally nuts. Honestly, if you think about what you're actually earning versus what you have to pay, the percentage wise is so much higher compared to the minis. Like I'll have my whole trading day, and my fees and stuff and commissions are less than 1% of my gains. But with the micros, it was literally sometimes 50% of my gains. It's ridiculous. But like, it's because I was trading 6, 7, 8 micros every shot, and it's just like every contract costs you. So like, like I said, on a regular day, I might earn with like 6 to 8 micros, I was earning like 250, let's say 250. Like if I count all like the bad losses, let's say average $200, but I had a gross win of like 300, but after fees and commissions, it would go down to 2 or 250. Whereas now I'll make like $600 or $700 in a day pretty regularly, and my commissions are like $8. Yeah. So for me, it just made sense. Like I said, if you've got the account size where you can trade and build an account with the minis, then you're good. But I just didn't have a big enough account where I was able to like confidently trade the way I wanted to with the minis. The only way I could like hold on to trades appropriately and like actually get paid for what I was supposed to is with the micros, because the idea of like making $800 and then potentially giving that all back and taking a stop of like $700 in my like 25K account or whatever was just ridiculous. Like the percentages just didn't make sense mathematically. So I was scared money with minis, So my only choice was micros, but with micros you're gonna pay through the nose for what's it called, for fees. So the solution for me was just do the Apex Trader funding and get access to an amount that I would normally not be able to trade with. Sure thing. Glad it's interesting to you. It's cool stuff. So let's see. I'm kind of curious to see if this will work out. Here while we're doing this, it's not really the right conditions to show you the reversal, but let me just show you the process. I'm pretty sure it won't trigger, but it might have. So let's see. So this like I said, the next setup that I use is a reversal setup, and what I'm looking for is to try to determine whether or not a local swing high or swing low is likely to be supported, right? And I'll show you how we figure that out. So we're going to use what's called the DVP tool, and that is the drawn volume profile. So what this does is if I pick an area to draw over, like let's say the whole thing, it will draw a volume profile. It's kind of hard to see because I have it dark so that it's not distracting. It's going to draw the volume profile of that area that I just drew over. And most importantly, it's going to give me this pink line, which is the point of control of the volume profile of this whole area. It makes sense when you draw a big area like this that it's in the middle because it's balance, right? So that doesn't really actually help. So in the room, we have a Slack channel. That's a good question. We have a Slack channel that we all type in. And then Simon's got the mic most often. But there's situations where it's like we're not actively trading and people have questions, he'll open the mic, or to have someone explain something, he'll occasionally open the mic. But it works better to have Simon be kind of running it with the voice. And that way it kind of keeps everybody on the same page. But we all have the Slack channel so that we can all participate. It's just that the rest of us have to type. And he occasionally will type in there, but he'll also have his mic on so he can immediately alert us to like right here, he'd be like, okay, watch for the trap back in if you're trading short, and so we'd all draw this and we'd be like, oh, and then he'd be like, yep, short 37.65. My stop is whatever this was +1. Like this is a valid short for him. So it'd be 70.75 is his stop. And then the entry is anywhere inside of this orange bar's range. So as soon as that closed, we would have already known it was coming, and we would short this, and the target is to come back to the purple line. Yeah. So with Apex, so I've been funded twice, and now I'm trying to with the smaller ones. I'm trying to move my way up to the bigger ones. I did the 25K, which was a cheap, easy, like you just have to make 1,500 before you lose 1,500. It wasn't very hard to qualify. It took me about 12 trading days to qualify it. But what I found was the max amount you can trade in that account is 2 contracts for the minis, which at first seemed like a lot because I was trading micros. But it was, you can only lose $1,500 from like there's a trailing drawdown until you make 1,500, right? $1,500. So there's, during the evaluation, there's a $1,500 max loss. There's no max daily loss, but on that tiny little account, which like I said, it was super cheap to evaluate. It's like $30 to evaluate it, or to try out. And you had to make 1,500 before you lost 1,500. But if you made 1,400 and then you lost 1,500, right? So bringing you back to just under zero, it would blow up the account. There's a trailing drawdown. That trailing drawdown disappears once you have the funded account, and you make the same amount as the trailing drawdown. So in this case, it was the $1,500. You needed to have a balance of $1,500 or more, and then the trailing drawdown just pauses there, which is cool. But I really want to trade the minis, not the micros, and I was trying to trade 2 contracts, and both times I ended up like taking 3 stops in a row and just like blowing it up way too fast. And so I talked to my coach about it. And I'm just like, I think I can do the bigger ones. It's just going to take me a little bit longer. And so the 150K target, you have to make, I think it's make 6K before you lose 3K. So that's taken me longer than 13 days. But yeah, maybe average 7, I'd say, trades a day. Average. Like today I only took 3. Today was kind of shitty price action. I only had 3 trades today. But yeah, I mean, there are days where I'll take 20. If it's really volatile and it sets me up a lot, I'll keep trading. But what Simon, my coach, has recommended, and I agree with this, the best thing to do for these to get funded, until you've gotten that trailing drawdown to pause, right? So you get the funded account and you build your equity to equal the amount of the trailing drawdown. That's how the Apex ones work. You don't even worry about big extensions. You just do the high odds trades to the main target and you exit all. So I'm not even holding runners. I'm just focusing on getting 10 points and then I get half off. And then if I get another 5 to 10 points, the rest of it's just done. So I'm like grinding 10 to 15 points every single time. And then if I lose if I'm wrong, the stop on these trades are I'm trading mostly NQ. The NQ trade stops are about like 15 to 17 points. So it's like I said, but the win rate's high. Most of my days I'm getting a 60% win rate or higher. Not long. Like I said, the first one, it only took me a couple trade. It was a month. I only trade 3 days a week. Because I work a regular job over the like Friday to Monday. I thankfully been able to go down to 4 days a week. I used to do 5 days a week, and now that I've been able to trade profitably, I've been able to drop one of my days and replace it with a trading day. So I trade Tuesday, Wednesdays, and Thursdays. And so trading 3 days a week. The very first funded one, it took me, I believe, 13 trading days. It was something like that. 13 trading days. So it was, like I said, if you weren't trading only 3 days a week, it'd be pretty quick. It felt like a long time to me, but it wasn't. Now, I will admit, I did blow a couple of them up first. It took a while to learn how to do it. And like I said, it's shameful to blow those things up, but it's not hard to do. So it's not like, I'm not going to say that like everybody's going to pass it just by, like having the algo. Like it's, you do need to know what you're doing and you need to be selective. The first time I kind of just tried to take all the trades I've been taking with my cash account, and like you unless you're going to take a tiny size, you really can't do that. And like I said, the other thing is you don't want to hold runners, because if they come back on you, it hurts a lot with that trailing drawdown. And so I just didn't have the strategy right at first. And after like some coaching and working on it and seeing how other people were doing it in the room, I was like, okay, I guess I just have to, like, I was kind of being stubborn about it, to be honest. Like, it's not like I didn't know that was the better strategy, but like, I just didn't want to have to change strategies. Like, I just kind of thought I could just do what I was always doing and I should be fine. And like I said, the first couple times I was doing a strategy that worked great with cash accounts. But when there's a trailing drawdown and you give back, like if you have a 40-point move, but you have a target at 60 points and you hold it and then it comes all the way back on you, with the cash account, it doesn't cost you anything other than your gains. But in these evaluations, the trailing drawdown means that it's as if you got, like, if you were long and holding for 40 points and then it came back at you, it's as if you got short at the high, right? And you give back those losses as if you were short. So you have to change your strategy. Yeah. Good. I'm glad. Yeah, I'll tell you, like, I've been a part of quite a few different groups, some of them free and some of them paid. And this group is a whole lot more professional than anything I've ever been part of. Like, everybody in this room is just, they're literally, their only goal is just to trade consistently every single day, right? Like, you can tell when someone's new because, like, they get a little confused at first, and maybe they're not quite in the zone at first, but once you see the potential of it and you have a couple, like, weeks where you're consistently trading well, and you realize that all I have to do is just be selective and only take these couple trades and stop doing the stuff I used to be doing and just focus on this, all of a sudden, like, consistent months, like month after month after month. Like, it's, and I mean, like I said, Simon has helped a lot with, like, risk management. That's something that I thought I understood, but I wasn't respecting the leverage of futures. I wasn't understanding that, like, because what he basically taught me was just, like, all it takes is a couple bad decisions in futures, and suddenly you've given away not only your gains for the day, but maybe even your gains for the week. And, like, if you're going to be a consistently profitable trader, you don't have to be perfect, right? You really don't. But you need to know how to stop trading poorly. And that, for a lot of us, is just stop trading when you're not trading well. Like, but what's great is that I have a system that everybody else is using in the room. So if I'm like, hey, if right now I was like, I'm long 65.50, like, I'm gonna get like peer pressured to exit the trade, because they're gonna be like, that's not on process. What are you talking about? What are you doing? That's not you shouldn't be long. Get out of that trade. Right? Because everybody's on the same page. We all are looking at the same exact thing, looking for the same exact trades. So and my coach knows what trades I'm taking. So even if I was right and I had a good reason for it, if I'm posting that I'm long here, I have to back it up with, I was looking for this trade, I got this, I'm long here. And all it took for me was just to stop taking those trades where it's like, oh, this looks kind of bullish, I'm gonna get in. Like, that, a couple of those a day was ruining my P&L. So right now, I was funded on the 25Ks. I've recently, they had a big sale and I decided to get the 150. I'm not funded yet on the 150. So I'm evaluating the 150. But multiple people in the room are funded. Simon has a couple of the accounts, and multiple people have gotten paid out. So I know for sure it's legit. I didn't get to the point on the 25Ks to get a payout, unfortunately. Both of the times, like I said, I wasn't able to hold on to the account long enough. But that was my fault. That's not the system. That's just because I wanted to trade bigger than it was intended to trade. I wanted to trade minis. And that 25K account, even though you're allowed to trade minis, it's not built for it. You can't sustain, you're not going to be able to trade minis and never give back $1,500. It's just not reasonable. But not giving back 3K or not giving back 5K, that's very doable. But 1,500 was just too tight. It was just too hard to hold on to it. So yeah, I went ahead and got the what's it called? The 150. And so and here, I'll show you. So I'm up, I don't know how to show this to you without, no, I guess I don't know how to share it without showing my account number, but I got it on November 1st. Today's the 10th, right? So I'm up $730 in there. and I've traded. Let's see, what day was the first? Was that a Tuesday, Monday? So Tuesday, Wednesday, Thursday, Tuesday, Wednesday. 1, 2, 3, 4. So I've had it for 5 days, and I'm up 730. So a little bit slower than I want to be, but doing okay. Yeah, let's see. Right now, NQ, I find that 5, 10, 17 points, that has must be too much. Yeah. Yep. It's true. Yeah, right. And like I said, I'm trading NQ, and it's, with the algo, it is doable to have a 15 to 17 point stop and target, but it's with, yeah, you have to know, you have to have a system that tells you when to trade it, basically. There are times where NQ is untradeable. Let's just put it that way. There are times when NQ is untradeable. ES, what I generally do with ES is we'll use max 5-point stops. So like here, this short, I'll show you. This short, we would have been short at 66, and the stop would be like a tick, like 70. So that's 4 points, right? So like, yeah, like that's pretty normal. 4 to 5 points usually is the stop. And so if I've got a 4-point stop, I'm going to take my first profit at 3. So 66, 60. So I'm already out of half of my position here. And then I'm trying to get another 5 to 10 points. And then since I'm dealing with that trailing drawdown, I'll just take everything off there. Because if I'm getting like 8 or 10 points on ES, I am happy, right? That's cool. As long as you can do that repeatedly, you're good. I do not need 30-point runs in ES to make money. It's nice when you catch them, but you don't actually need those. Right. Yeah, it is all about CPI. And that's why, like, this is when mean reversion strategies work the best, is like the 80% of times where there's just nothing going on. Like that trap back in setup is perfect for this environment. It's just slow, so I can actually explain it. But normally it's just a little bit, I mean, it's not fast, but it, it doesn't take 50 minutes to make one rotation. It maybe takes 15 to make one rotation. So like, but you still have plenty of time to like draw the line, see the algo print, go into NinjaTrader, click the button. Like, it's not, especially ES, it's not that fast. But NQ, if it's volatile, there are days where if I don't have a stop order in, I miss my entry on NQ. And the rules are I can't chase. So I can put a limit order back there in case they come back in the very next bar and fill me. But otherwise, I just miss it. And if it gets that volatile, we tend to switch to ES. Because while Simon has no trouble scalping NQ, like pretty much ever, he's been doing this for 25 years, I think. He used to own a hedge fund in the early 2000s, I believe. And then I mean, he's been a screen trader since the late 90s. Yeah, so he can do it, but he knows most of us like can't go that fast. So he will recommend that people switch to ES, but he's always showing both, because there's some traders in the room that only trade ES. And then there's some traders in the room that only trade NQ. But most of the traders that trade NQ have a little bit more experience and would probably be comfortable trading ES. They might just prefer NQ. And like I said, I've gotten used to NQ. I just kind of know how it moves. But I've traded ES for a long time, so I don't mind taking trades in ES also. Yeah. What? Right. Yes. Very serious. I agree. Yes. I'm telling you, it took me a little while. At first, it was a little bit intimidating. Because I felt like everybody else knew what to do and I didn't, right? And that's like it's sometimes it's hard being the new one, because it feels like there's so much to learn and you don't want to do anything wrong. But eventually, I learned to really appreciate the fact that, like, in other rooms, like, I would say I'm doing something and like they'd probably snicker about it and then like make fun of me later, but not actually try to help. You know, and whereas in this, like everybody's so professional about it. Like yeah, like Simon doesn't allow for any like there's no memes getting posted or like like everyone's they're we're easygoing or whatever, but I mean we're all there to go to work, and there are people from all over the world, every race, creed, religion, whatever. Like there's a guy from Norway, there's a guy from South Africa, like it's a guy from India just joined, and it's like it's so there's quite a few like women traders as well. So it's a really good mix of like and then ages too. Like we've got a couple that are younger, and then like quite a few that are like Simon's age. Like Simon's like in his mid-50s, and I believe a couple of them are up by Simon's age, but many of us are 10 or 20 or even 30 years younger than that. But it's all I'm saying is it's a good mix. It's like yeah, it's a real comfortable atmosphere. Are you allowed to keep doing the 2 real contracts, or is that suspended until you pass? No, I can keep playing. Yeah, no, I can keep doing it. No, I can. Yeah, you can have up to 20 funded accounts or evaluations, and you can trade both. So you can have a funded account and also evaluate other ones, and then you can evaluate multiple accounts or trade multiple accounts. And you can actually use the NinjaTrader trade copier to copy your trades onto multiple accounts so that you can push the button once. And if you've qualified 3 150K accounts, you can get, 2 contracts in every one. And, you'll now, the net result is that it's as if you're trading 6 contracts, but you're not going to blow them up by having a day where you lose 3K because you only lost 750 in each account. So it's kind of a clever workaround that that Simon uses. I don't remember how many he's got running. It's either 2 or 3, but Daniel in the room has a couple as well, and then quite a few of them have one funded account, and they just trade that. But like I said, I would have been okay trading micros. I just don't. I feel like I need that room to grow, and I don't like the idea that any more size that I add risks blowing up the account if I just have a normal down day. I needed a big enough cushion where I could have a normal down day. Because like a normal down day for me, trading 2 minis is like $400 to $700. Like that would be like a normal down day. And like if I have 2 of those in a row, what I found with the 25K account, if I had 2 of those in a row, just a normal down day where like I just don't quite read it right, maybe make some mistakes, and then the next day maybe I do everything right, but it just didn't work that day, right? All of a sudden the account's blown up, and it's like, and that just that's not okay. Like I want to treat it like my money, I want to be able to treat it as if I was the one funding it. And I don't want to have to constantly be concerned that if I have any like 1 or 2 bad days that I'm going to lose the account. So I just decided, you know what, I need a bigger cushion basically. But yeah, and I could technically still trade my cash account too. But yeah, what I do is I've got the Rhythmic for the smaller one, and then I've got the Ninja for the bigger one, so I can have multiple accounts loaded, right? And I can have basically multiple DOMs too. But I just to keep things, you could just do multiple Ninjas, but I'm doing I like to split it up so that I don't have to think about like which account is this, like. So I just keep the new one on Ninja and the old one on Rhythmic, and that's enough organization for me not to make sizing mistakes, because I don't want to accidentally like execute a huge order on the small account and blow it up for no reason, like without even like getting to my stop. And yeah, having them both ninja DOMs just of different color. Like you can do that. You can make your DOMs different color and save them differently. But I just yeah I've learned to use Rhythmic's DOM since I'm literally just entering orders. You know, I'm not reading it at all. I'm just basic order entry. Stop, target, go. Right? Like entry, stop, target, execute, 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 and or else I'll even use like the brackets. And then I just have to push the button one time, and the brackets like preset for me. So, and then I usually have to move the brackets once when I figure out like where my target is and stuff. But once I've moved all that stuff, Simon is a big proponent of not touching your resting orders because usually, assuming you got into the trade with good intentions and with a like on your process, on your plan. If you then decide that you want to move that stop or that target, most likely that's an emotional reaction and it's not a logical reasoning, a decision. It's because you have the risk on that's influencing you to think you should change your plan, and that's almost always a mistake. So, yeah, it's but yeah, I love the fact that you can evaluate. You can evaluate while you still trade the PA is pretty neat. And like I said, you don't have to copy all of them. Like you could just have 3 accounts and just like cycle through them. Like there's all sorts of ways to do it, right? But for every account you have, you do need to qualify it. So that's the only thing is that and that like I said, more than anything, it just takes discipline. More than anything, and then obviously a system. But if you have a system that can perform like this, like you can do it. It can be done. Yeah, but I think Simon was talking about possibly sharing like a video blog, like of like starting like maybe like a 100K or 150K account and just like sharing every day how it's going. Just to and then like what trades he took and how it went, like just to like demonstrate it because it's, yeah, like I said, it's been pretty consistent. And that's what's amazing is that like literally the ones I've never been in a room before where everybody's trading the same system and everybody's actually profitable. This is the first time I've actually ever been to a room where like it's not just the, elite few who are doing well. Like anybody who's following the system in the room right now is profitable. Like there's still people have down days, right? And people make you could tilt and you could totally blow up, but day to day, like the expectation is that everybody's going to be profitable as long as we follow the plan, and that's been the case like for a while now, which is pretty neat, And it also makes you realize that like this game it's not about being like special. It's not about being smart or like having some extra abilities or whatever. It is literally just a game of doing the right thing over and over again. It is a grind. But yeah, a little bit of a tangent, but that's it's good questions. I think the Apex is really cool. Here, I've got a 50%, if you want to look into Apex, I've got a 50% off coupon I can share with you. Here, hold on. So here. So this'll give you the coupon and the initial price. So and like I said, we're not I just, like I said, we're just using them because we like the fact that the trailing drawdown goes away once you build the equity in the performance account. But so the regular price will be shown on the homepage, but then there'll be the if you use that coupon code, it'll take 50% off of it for every month. And what's cool is once you've qualified the account, you don't pay the fee anymore. You only pay I think it's like $85 no matter what size you get. Like the licensing fee or whatever for the performance account, it's just $85. The but like the 150, like I said, normally it's like 300, but with the 50% off, it's only 150. And like I said, in October they were doing a like an even bigger sale, and so I got a special deal on them. Every once in a while, they'll probably do another one at Christmas time. Usually on the maybe Thanksgiving, I don't know, but I think the either the 100 or the 150 is probably the smallest I would go, because even the 75K, the trailing drawdown of 2750 is like that. I mean, you probably won't blow it up, but you could. And like I said, I thought the 25K was way too hard to sustain without ever giving back 1500. Was just you'd never be able to size up. You just have to trade small. But most of us are doing most of us who are doing these are trading the 100 or the 150, and that seems to work for most people. I believe Bill might have done the 300, but most of us are doing the small one because, like, if you look, like the 150, the contract max is 17 contracts, and I can't imagine trading that many. Like, cool. Sorry, now you press the one button and trade the real crew contracts while trading the test to pass 150 account. Yeah, exactly. So yeah, one of them is signed in because I use, it's called what's it called? Host and client. Like I said, I'd show you, but I don't think I can. I don't. Hold on. So when you sign on, yeah. See, it's already. If I do it, it'll sign me out. But when you go on and you get Rithmic and you get the NinjaTrader license and whatever, and so you can sign on to Rithmic more than once with the same credentials, and then you have a choice underneath for which account you want to be trading on for that specific DOM, right? So here, maybe I can. So like, see if I can try not to share everything. So down here, oh no, it is going to show it. So right underneath that, there's like another drop down, and it's got my account info in it though. It's like a drop down where you just choose which one you want to do. And once you've connected, you can switch them. So you could have like one DOM that's one color and then the other DOM that's the other, and you'd have both of them connected. Otherwise, what I do is the client and host. So I have two different Rithmics running. One of them is connected to Ninja and one of them isn't. The brackets is something any of us could teach you how to do. Yeah, absolutely. Totally. Yeah. Any of us could share it with you. Yeah, it would probably take 30 minutes just to show you how to set it up. And then, like, rather than just doing it for you, we would just teach you how, because then you can make it however you want, once you've learned how to do it, it's not hard. But yeah, I mean, everyone in the room is super helpful because we've all kind of gone through it. So like, you could literally just ask and either I'll do it or anybody else who's like done trading. Like if there's there's a lot of days. If I didn't mention already, maybe I said this already, but the plan for this qualifying account, the one I'm evaluating, is every day target $500, and then once I make 500 or more on a trade, like let's say I make my first trade and I make 330, and then my next trade I make another 300. Now I'm over 500. I don't just exit so I hit 500, but I got over 500. That account then is closed for the day. Right, and I'm done with it because I don't want to give it back because I don't want to blow it up. And you want to end those days on the high watermark if you can. Then I can go to the real money account rather than just the evaluation, and I can trade however I can go for the rest of the day, or I can take 2 trades or whatever I'm going to do. But eventually, the result is I'm not trading open to close. That's what I'm trying to get at. Is that the majority of us are not trading from the open to the close constantly. Like most of us have a goal in mind, and once we hit that goal, we are moving on to other things whether it's journaling or back testing or working together on a new setup or watching a video to improve or doing a coaching session with Simon. Like it's, you know, one way or another, it's yeah, like there's almost always someone trading, but after, like, some of us on a good day, I'll be done within 90 minutes of the open. I'll have hit my target, and if I don't want to trade in the real money account, I'll just be done for the day, right? And like, because the key is to become aware that, like, you can't focus on this optimally for more than a couple hours. Like, you eventually, your eyes start to glaze over and you're not going to be able to, like, respond as quickly. So if you do want to trade the morning and the afternoon, you take a break and then you come back. Yeah. Yeah. I mean, and right. I mean, I agree with you. It's something I've never seen anywhere else. And like, I've been into quite a few rooms, and I've never before have I seen a situation where everybody's using the same setups, right? They're all like we all have our own little filters and ideas and stuff, right? We're not all like machines, right? We're not all trading exactly the same. Like, I might have rules that I have to get, like, the triggers are the same. But there might be a situation where Simon, my coach, is totally fine taking a trade, but I will skip it because if I take it and it stops, I'm at risk of going on tilt, right? So an example would be, like, here everything's been working, but let's say, like, I take a short and I get stopped out and then I miss the re-entry, whereas I'm supposed to get in, and I miss it. And then it sets up long and I miss it, and then it sets up short again. I will occasionally just step away, because it's like, I've missed all these trades and there's probably a reason for it. And so even though they were all valid, I see this one, I might choose not to take it, because if I miss, take it and it stops, like, I know what myself well enough that I will not be able to continue to trade well for the rest of that day. Whereas if I'm miss, see it, but choose not to trade it and instead take a break, write a journal entry, get something to eat, take a walk, come back, trade in the afternoon, I'll be fine, right? So, and like I said, Simon and the group, like, helps everybody recognize where they're at, right? So, like, I sometimes am not aware enough that that's what I should do. But if I'm like, shit, I missed this, and then we go down and Simon's like, okay, I'm long 37.58, and then Randy's like, yep, got it. Daniel's like, yep, got it. Bill's like, yep, got it. And I'm like, fuck, I wasn't watching it. I missed it. Simon will right away be like, Ben, take a 10-minute break, right? And not in like a punishment way, and I know it, right? It's just like, you're not trading optimally, step away, right? Like Simon has said before, like I said, he used to run a hedge fund. So he's, he wants us all to be to the point where he would hire us, right? If he was still running the hedge fund, he wants us to be trading to the level of what he would expect of his traders, right? Like, we might not work for him, but like the expectation is that our performance is similar to as if we were, right? And I really like his like mentoring and coaching style. I find I don't know, it's like I said, I've been to a lot of different groups, and he's like, I've never once seen him like poke fun at somebody like in a way that could be seen as what's it called, like insulting, right? Like, he knows how to motivate you. Like, he actually gets to know all the traders and realizes like what it is you need to improve, and kind of like helps you in the way that you want to be helped. Let's just put it that way. Like, there's some traders that like are very sensitive, and if someone like criticizes them, they're not gonna trade better. So he will tactfully work with them in a way that will build their confidence rather than like shoot them down. No, I had to build it a little bit, the template, but like I said, we can help you with the NinjaTrader platform stuff. It pretty much shows up all automatically, but like there's a couple little steps you need to do. Um, it's not hard, but they do have a video on it on their website on how to set up NinjaTrader, and it's in there. So like you can figure it out on your own. But the easier way to do it is like one if you're in the room and you have and you've already got the accounts, like just get together with someone else who's running Apex and we'll walk you through it in 10 minutes. You know, it's not difficult. But and like I said, they do have a video on it, but there are a couple you have to like make a connection between Rhythmic and NinjaTrader. And so there's just a couple little things to select. And then you have to like put your name and password in. But other than that, it more or less is just auto. The template is pretty straightforward. If you have more than one account, it just shows more than one, you know, but each individual template, you can customize it however you want. When it comes to like entering, like here, maybe I can show you this. Let me see if this, yeah. So something like this, right? It's like order quality. This is like what I'm using for NQ, for micro for MNQ. And like, so I use this, on the, not the, what's it called? The funded one, not the one with the trailing drawdown. And this way I can get the target, the higher target, but on the trailing drawdown, I don't have this one. This one's missing. I have them all gone by this, right? I don't leave the runner. And so it's easy to set up. You just take this one away, right? Like you make one like this and then you take this one away. And then once you get funded and you just put it back. So it's not hard to do. That part is easy. Yeah. Yeah, totally. Oh yeah. I'm telling you, like it has made all the difference for me just to have everybody. Trading is lonely, man. Like it's tough just like sitting in your room all by yourself trying to make decisions, not really like it's and I'm not saying like just like the socially lonely. I'm saying like the fact that you're all by yourself makes it way harder to figure out whether or not it's you that's making a mistake or if it's just the market that's not like fitting your strategy. And like having everybody focus on the same thing and like all sharing what they're doing, and like, you know, if I'm like, so let's say that like I'm new and I'm just learning how to do this trap back in trade, like I might catch this, right? And then as I'm doing that trade, someone else might be like, hey, I drew the DVP and here's the POC. And I'm like, wow, I don't know about that. What's this? And then I can listen and see. And then they're like, okay, it triggered. I'm getting in long here. And you're like, oh, wow, that's kind of neat. How do you do that? Right. And then once you're ready, you can learn a new setup. Like Simon will teach you the new setup. And so you learn them one at a time is what I'm trying to say. You master one of them and you just like ignore all the rest of them. I didn't take that advice. I tried to learn everything at once, and it was because I'm just stubborn like that. Like I just thought I could figure it all out, and it was totally overwhelming. I wasn't good at any of them, and I didn't have any of them down pat, and yet I knew enough to make me feel like I thought I knew what to do, but none of them were. I wasn't like I hadn't mastered them. Yeah, yeah, right. And I mean, yeah, yeah. I'm telling you, like I've been in the rooms just like that where and it's not necessarily like I don't know, like an unsafe workplace or whatever. But I had to eventually ask myself like, am I growing every day from the interactions, you know, or am I actually looking am I going in there because I want the social aspect? That's what I was getting at, the lonely part. Like we are we're social beings. Like we are going to be drawn to work with others, and especially in something like trading where like there's lots of uncertainty and lots of volatility, and like in not in markets but in like your performance. Like you're going to want to have like a sounding board, and you're going to want, yeah, and all those things are great, but when all of your social connections, when everybody's trying to get that social interaction and a few people are actually trading seriously, the result is the majority doesn't make money. The minority who's focusing does, and the majority thinks that all they have to do is just follow that minority, that like follow the calls of the people who are focused and working, and then they'll just magically like become good traders. But the truth is if you don't learn what they're doing and how to do it yourself, you are dependent on them, right? And Simon's really big on teaching us what to do and like how to figure that out, not just follow him, right? Like he'll share when he's trading, but any of us, like he could tell me I got short at 37.66, do you see where it was? And I'd be like 37.66, oh yeah, right here, trap back in, right? Like I know, like I could see it, right? Or if Daniel was like, hey, I took a reversal trade and my entry was 64, do you know what time was that? And I'm like, oh, it was probably 2:15. You took the green bar. And he's like, yeah, right. So like I know why he's getting in and how he's making that decision. It's not just Simon says buy, so everyone buys. It's impossible to do it that way. So yeah, it's and it's right. Yeah, no, and like I said, I know, like I gotta admit, like I've met a lot of really accomplished traders. Most of them are not very good coaches. Like they're all about their proprietary system, and they're all about themselves and showing how great they are, but the moment they feel like anyone's like actually catching on, they take it as like a threat, like somehow you're gonna like, I don't know, like overtake them somehow or whatever. And like I said, that's just not something that I've had to deal with at all in the room with Simon or any of the other accomplished traders. So that's just something I just haven't had to deal with ever since leaving those other rooms. But even, I mean, just look at Twitter, right? If you ever go on like Twitter and you see like all the what do they call them, the furus, the financial gurus, like all of them, all it's about is like, look at where I was right, you know, rather than like, let me show you how I figured this out so that you can learn how to do it yourself. Like no one does that, right? And so that's really why, like, if I'm gonna pay membership to be somewhere, the way I look at it is it should be something where I'm actually gaining a skill. If I'm paying for it, I should be getting a skill, not just paying for access. You know, I want to learn how to do it, not just be able to watch you do it. You know, that's and like I said, Simon's a big proponent of that too, and it shows. Like you can tell just in the way that he coaches that he's just kind of, he's no nonsense. He's not, you know, he's not the most charismatic guy, right? He's just a normal dude, right? Who's just really good at trading and has a system that is not that complicated, and he's good at teaching that system, right? Like he's become an expert at this, and that's, it's a perfect match for me because I needed the confidence that the system worked, but not the ego that was like threatened by people doing better, right? Like he's not, there's not like this competition with like, who's gonna, you know, I don't know, who's gonna like I remember stuff in other rooms where like, you know, people would be like known as contras, and they'd get all they were wrong a couple times, then everyone like shits on them, and then they say they're long one thing and they'll go short. Everyone else says they should go short because Ben went long, right? Like all that stuff. It's like it's so detrimental. And like I realize some people say like, oh, you know, be a man, it's tough love. Like they're just teaching you how to make better decisions. It's like, yeah, for me, like I never like just seeing anybody like in that scenario, even if it wasn't me, like it makes me feel uncomfortable. Like I don't want to be around that when I'm supposed to be focusing on what am I supposed to do right now, right? How do I make money? Like why mess around with like making fun of each other? I don't know. Like it felt like the locker room of like high school football practice or something, or like after a game where everyone like complains about the guy who dropped the catch. You know, like I don't know. I don't think that helps. Not when you're like developing. You know, maybe when you're a pro ball player or whatever, you can roll with that and it motivates you. But what I found is for most developing traders, what they need is to be pointed. They need help to see what they're doing right, and to figure out where to work, right? And like how can I improve incrementally? And so like Simon's really good at breaking things down and giving me like homework, basically. Like next week you're going to work on this, and then you're going to come back to me in our next session and show me what you did. And then I show him, and it's usually not exactly right, but I'll learn something from it, and then we'll go to the next, you know, one step at a time, basically. That's funny. Yeah. It's. I mean, like I said, some people just don't know. Like I said, they're probably excellent traders, but they just don't know how to manage people. You know, like running a room and making decisions about like how things, what's allowed, and what the like having like a control of the atmosphere and stuff like that. Like it actually, it's a whole other skill that's completely separate from trading. And like I said, I'm not saying there's not people out there that can do both. I just don't know any other ones, right? I don't know any who are that successful, who've been trading successfully for a long time and have made a good chunk of money and continue to trade, that can also manage and coach people. Because usually it's like you're either a really good teacher or you're really good at doing the thing, but it's very rare that you find one that's good at both. Because like I'll admit, I'm a way better teacher than I am as an executor. Like I can explain exactly what I'm supposed to do very clearly, but then when it actually comes time to do it, I will hesitate, right? And that's, some of that is just confidence and practice and like consistency, right? And I'm definitely better at it than like every month I'm better at it. But what I see all of the missed trades and the execution errors and things like that are the things I focus on. And then when I watch, you know, others make decisions, they might not be able to explain what they think is going to happen or why it should be this way, but they were told that this is a setup and they took it exactly like they were supposed to take it, and they made money. And so it's like sometimes I sort of wish that I could just like turn off my brain and rather than having to think about what's going on, just be a good executor, you know. But that's just not how my brain works, and so I need to work really hard basically to like stop processing information and to start reacting. But like I said, that's my own issue. That's just where I'm at. Yeah, that's definitely a problem too. Yeah. And I mean, now not everybody in the room shares every trade. There are definitely some that keep pretty quiet, and they'll speak up if like Simon asks them some specific question, but they won't necessarily like share all their frustrations, and then there's some of us that are just a lot more vocal. That I think like we probably share to get confirmation that we're doing it right, and I definitely fall in the latter group. But not everybody is like no one's forced to share anything. But for me, I feel like I learn more if I share. So I would hope maybe it might be helpful to others too. But like I said, just the way my brain works, like I need to put it out there to be accountable to it. If I say I got long and then I realize that it's not a valid entry, I will learn better than if I just see it and then just scratch it and never told anybody about it. Like I'm like that moment of embarrassment, like in that where I brought it on myself, right? Not somebody making fun of me for doing it, but me on my own sharing it and then recognizing, you know what, this is not my trade, I'm out of it. Like that's growth, right? Like being able to recognize that in time is progress for me. And it's there's something added to it when you when you are with other people that have seen you like develop like that, and then you get like that confirmation from others, like like good call or whatever to exit. And it seems like it's not a lot, but for some reason I don't know, it matters. It's for me, like I want that, like that confirmation that like, okay, yeah, I'm doing what I'm supposed to be doing. And that sort of, it keeps me attentive to what I'm supposed to be doing. Whereas like if I don't have any accountability, I know that I'm susceptible to getting totally off track. But like I said, not everybody has that issue, but that is just the way my brain is. So okay, let's see. So as far as what to do next, the highest odds entry would be to get long down here, and the best way to get long down here would be a trap back in there. So if they came down and then immediately bought it back up again within 1 bar after testing underneath this low, that automatically would be a decent entry. So you can watch for that right here. It's not always going to work, but it would normally get us back up to this yellow line more often than not. Cool. I'm glad it's been helpful. That's good. Yeah, and I mean, and what's crazy is it's different for everybody, right? And so I don't know. Like I think I'm just impressed that like that you can have like a room where everyone sort of feels like they're getting out of it what they need, but yet they're all like sharing at different degrees, and no one's really forced to do anything. It's just like, hey, if it helps you share, but if you don't want to share, it's fine. Or if you just want to, like Simon will, like people will just like on Slack you can send like direct messages. So like if people are like embarrassed to say like is this a setup or not, like because they don't want to like look like they don't know what they're doing, even though like people would just help if they did say something wrong, like, but some people are just like, I don't want to put that out there, but they also want to make sure they're right. They'll just send a direct message to Simon with a picture of it and be like, this is it, right? And then he'll get, he handles those pretty well too. So like I've renting a room is not easy, that's all I'll say. And it's amazing to me that he trades so well despite having to like teach us all at the same time, because I've tried doing that and it's not easy. Like just focusing on explaining as well as doing it takes mastery basically. So let me show you this reversal. So let's say we were going down, right? Let's say that it was it? I think it was, right? Wasn't it bearish here? Yeah, so this is technically the low, but let's say that this was the low. It's been long enough here that we can use this anyway. What we would do is we would draw the volume profile on just the wave to the low. Where's my waves? Where is that? There they are. So these are Weiss waves. which is basically accumulated volume, but they are separated by rotation. So anytime you get one of these apexes, you'll see the color will change in the waves. See that? So right away, what that tells us, like here, I can see that buyers became dominant. See how the big waves are green? And then here, for the first time, the sellers had a dominant wave, right? Because this one was smaller than this one. And now you've got a smaller green wave. So if this comes down, then sellers are dominant at the moment. And so that's a good thing to know. But like I said, the way that you don't have to know that to build this setup, but that's just something you can just see from the waves. But what I want you to see is that the colors change every time you get one of these apexes, right? So the colors will change, and that's how you know where to draw it. So if we're looking to the low for a reversal back up, what I'll do is I'll draw the volume profile over the wave from the high to the low of the wave to the low, and that'll give me a POC. So I'm going to mark that. So this is the point of control, the volume point of control of the wave down. Then we're going to do the exact same thing for the wave that came off of the low. And we got to do these separately, because if they're separated, it's going to give us different information than if they're together. So see how these are close together and they're both in the middle? That gives the opportunity for a reversal. If one of them was up high, if this down wave was up here, or if this up wave, if the POC was up here, the chances to get an immediate reversal here back to the upside is lower. So once we confirm that both the wave to the low and the wave off the low had their volume point of control primarily in the bottom half and not in the top, now what we want to see is we want to see, can the buyers develop some volume on top of both POCs? So when I say develop volume, what it basically means is find a bullish bar with a VPOC, the little dash above that line, and that bar needs to be not pink. The pink and the purple bars are a sign that price is moving, primarily because traders are pulling their orders off the order book, not because traders are aggressively buying up. They're not absorbing or anything. They're buying, and then someone who was in the order book is no longer there. For instance, if we want to analyze what happened here, on the low, we have the buyer shows up here, right? The sellers get absorbed. The buyer shows up, and during this price range, while the buyers continued to buy, they didn't need to use very much energy to get this bar closed to the upside, because sellers, as it went up, they were actually pulling their orders off the order book. What generally happens next is we retrace and confirm, re-auction that area. See that? Pink bar, re-auction. That's normal. It's not always right away, but it usually is. Pink bar, re-auction, right? Now, since we've had two pink bars in this, generally what you're going to see is they're going to return to the pink bar, the first pink bar's point of control. It almost got there. Almost, right? It almost got to the point of control of the pink bar, but the important part for this setup is that we had, in this case, 1, 2 bullish bars with POCs above both of the lines that we drew, which is where all the volume was on this move to the low and off the low, and these guys are not pink. So these are real buyers buying from actual sellers, not just price moving up because buyers were buying and sellers were pulling orders. So they had to actually work hard to move price up here. And that's what we mean by developing volume. Once you see this volume developed above both of these points of control, which again were drawn from
the wave down to the swing low, and the wave up from the swing low. Now we are looking for 3 possible entry triggers. The primary one is the green bar for longs. That's our best case scenario, and preferably we want it in the bottom half of the channel. We don't want to take green bars that show up here. We want to take them down here. That's our primary entry. Another entry option would be if we had a star that has a wick that touches one of the points of control. So this guy has a star associated with it. I've got it a little too high. I can adjust that, but on here it's associated with this. It's just a lot higher than it should be, and that's all adjustable. I just have to go in there and fix it. But see how the wick touches one of these points of control? That is also a scalp. These are scalps, right? They're small. You buy and then sell. This is ES, right? You'd sell a little bit at 3 and a little bit at 5 or 6, and that's maybe you get 10, but not usually. Okay, cool. Yeah, no, I appreciate the good questions you had, and yeah, definitely get some sleep. Feel free to. I'll leave this up, so if you want to watch it on YouTube, you can rewatch it and see the beginning. But I appreciate the good questions, and yeah, I definitely recommend at least asking for a free pass and getting a feel for the room, even if you aren't sure if you want to do it or not. It's you might as well take advantage of the free pass and get a feel for it and just see if it's something you want to do. He's not much of a salesperson, which is kind of nice. It's not a hard sell. It's just sort of a, if you want to do it, let's do it. Otherwise, that's cool. We're good. He's an easy guy to work with. But we'd love to see you in there, and one way or another, even if I don't see you in there, good luck to you, and be careful trading futures. But yeah, I will. Let me finish this quick. So again, just to go over this one more time from the beginning because it's a little bit complicated. Step 1: draw the volume profile to the low and off the low. That gives you 2. Oh, did I do that? I don't think I did that second one right. Hold on. Let me try that one more time. I might have grabbed the wrong one. Here. So I'm just using the waves. Oh no, it's right. Okay. And then I extend these just so that I can see where it is, right? So those are the 2 volume points of control. Rotation down, rotation up. I have at least one bar that's not pink, that's bullish, and has a POC bar above both of these lines. We have 2 of them. Now I need a trigger, which is either for bullish, it's green bar, preferable. Secondary, and this one, like I said, can be anywhere down here. It can even be underneath it. It's okay. It just can't be up here. It's got to be where most of your longs should be, which is interacting with the lower downstairs down here, not way up here. And then the secondary scalp is a bar with a star on it that interacts with either one of these POCs in the wick. So you want the wick to touch either one. It's not to touch both, it just has to touch one or the other. It's better if it touches the top one, but it also works if it touches the lower one. And like I said, both of these are for a scalp back to the top. So the only problem with this entry is that you don't have very great risk reward. Your stop would go underneath that bar and your entry is here, and your target generally is either the yellow line, which is like right here, or the last apex, which is here. So if you think you can get to the last apex, it might be worth it. But if you think you can only get to the yellow or the orange line, the chances of getting 1-to-1 are not as good. Whereas the green bar's location is much better, right? Because you've got an apex up here. I guess he's also pretty close to the yellow line, but yeah, he's further down. I don't know. Maybe it's about the same. To be honest, it might be about the same, but. These would both be good for scalps either way. And like I said, the chances that you get 3 points on these is high. They're going to get, but the chances that you're actually going to reverse the entire, the entire trend is not that high. So yeah, when I say it's a reversal, I guess what I mean is that it's counter trend, right? The trend is down. You put in a low, and you want to know when can I buy it even though I haven't had a trap, right? There's no trap back in here, which would be your high odds entry. This is a way to get in before the trap comes in. Either one of these would be fine. You only hold it for one rotation, unless you want to hold runners. But like I said, that you need to know what you're doing when it comes to like having a target that's higher up to really hold runners well. But if you're going to hold runners, this is a green bar is the kind of place in this setup is the kind of thing that you'd want to find for a swing trade. This setup does occasionally work out to giving you big swings. Now, there's an extension of this. This is something we call the DVP trade because we use a drawn volume profile. An extension of this trade that does develop into a bigger swing trade a lot is when you have the exact same setup and the first or one of these rotations, it's usually the first one, closes a bar bullish above one of these apexes. So the first entry was here, and that first rotation came up and closed a bar above an apex. See that? It even closed above these apexes. Once that happens, now the next pullback, if we can get a trap back in trade, a green bar, a star, that I guess that's pretty much it. Any of those aggressive signs, you can then hold for a swing. On ES, it'd be like 10 points higher or more. On NQ, it's like 30 to 50 points, sometimes more. But it would have to trigger. So in this case, it did. In this case, you had, we call this the supernova because it tends to really go, and kind of like, yeah, it just goes really hard. And they tend to be triggered off a star. So to remember that, Simon calls it a supernova. But so we have, like I said, the DVP trade identifying that we might be willing to take longs here, even without a trap, because normally we'd be shorts only on traps. But once you've gotten above these volume profiles, volume points of control, and then came back and triggered with the sign of aggression, now we know we can take longs as well as shorts. Once we've gotten above this and closed the bar, we're generally looking for long only, and we want to get it back here on a star bar, a green bar, or a trap back in. And then we'd hold runners here unless you're trading with a trailing drawdown, in which case you'd just take the scalp and, any sign of weakness you'd have to get out basically. But if you don't have a trailing drawdown, your stop stays here, and you could take your first little bit maybe at the yellow line and then hold the rest in case you get a swing. And this works quite often. We can find another one. So let's see if it triggered here. Wave to the low. Wave off the low. It happens, not always, but it's easy to find on looking back because you just look at where the last low was. And that's usually where they show up. Okay, so we need a bullish bar to close above both of those. So see, with a VPOC above them. So see, this dash is not above these lines. And this dash is, I don't know where it is, but it must be on the line because I can't see it. Oh no, here it is. It's down here. So none of these qualify. We do not, right here. Right there. So that we got a volume point of control bar, a VPOC bar a VPOC of the bar above the VPOC of both the wave to the low and the wave off the low. That is the sign to start looking for signals, right? So the ideal signal is a green bar down at the downstairs, which would be down here. This one is not positioned correctly. It's not in contact with these. If it looked like this, it'd be fine. But there's no wick here, so we don't want this one. We want this one. If you took it, you just take it again. This is the one you want. Then you'd normally think that's a scalp, but when they close above this apex, now you hold runners. Okay, so for drawing the POC lines, what you do, is you need a swing. If you're looking long, you need a swing to the downside that is a lower low. Then you need to on the algo, you're looking for. I'm looking at these waves down here, which are Weiss waves, so they're accumulated volume waves. And so see where it changes color here? It goes green, green, gray. So that gray one is associated with this apex here. So this tells us to measure from here to here. And then this one, green, 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 gray, right? So here it's the low up to this one. So it's those two. It's got to be both of them. It's got to be a volume, a Renko bar with a volume point of control above both of them. So here, here, here. All of those are signals that there's a chance that you could get a swing up. And then it's just a matter of finding the right entry. And like I said, if the way I drew it, I didn't put this one in the right place. I don't think the first one is valid. Hold on. Yeah, see, this one's on it. It's got to be above it. So that's not valid. This one's barely valid. This one's clearly valid. See how the dash is way up here? So the volume in this up bar is way at the high, and it closed bullish. So you don't want to buy that, but it's a sign that buyers are actually putting in energy above where the majority of sellers were. Right? So they're pushing higher. So that alone is not a reason to buy, because that could just get rejected, right? But now when they try to reject and they come back with a sign of aggression, that's a clear buy. So this becomes a buy targeting up here and maybe an apex. And then when they break the apex and close above it, now any setup you want that sets up long, you can hold runners. So as it comes back, you could technically buy that and hold runners. I don't know if it works. Oh, that one traps back in. So when it does this, when it if it gets you, if it stops you out here and comes right back, you have to buy that. It doesn't happen very often to long side, but when it does, you got to take it. Yeah, and so that gets you the second bit, right? And so here you might have lost 4 points, but then you'd make back more than 4 as long as you confidently got back in, because as long as you know it's valid. This does happen sometimes because we use a very tight stop. You can avoid this by using a deeper stop, but I would rather just get back in, because when it works enough to make back your stop and then some. So now you've got a bigger move, and usually this low holds. I don't know if it does this time. Oh, they tried. See, they usually the next swing will be above this apex. But then they got stopped there. So this is going to stop out. Yeah, that sucks. Look, they got all the way down here. Now that's not, it's unfortunate. I don't think that's a trap back in that I would take. I don't think I could buy that. Not when it retraced this entire thing. I wouldn't take it. It's technically valid. Yeah, and see, it does work. But just seeing this, it looks to me like buyers got stuck up here and then they took back this entire apex. It's technically valid. It's another one of those like judgment calls where it's like, well, it's a valid long. It is a trap back in. It traded underneath it and within 1 bar came back up. So it's technically a long, but I'm usually skipping those if there's any chance that it's bearish. But it's possible that you shouldn't skip them after breaking apexes to the upside like this. That might still be valid. I'm actually not sure about that. If you took this one and it went and then it pulls back again, is this always valid? I'm not actually sure about that. But usually what happens here is you have a chance for this to actually go turn into a swing trade. It's not always going to work, but see how it tries to continue. The chances that you're going to get some higher lows are increased. Yeah, this one's actually never stopped out. So you would have gotten long down here. I mean, it's a good location. So your long is here and your stop is under this. And you could still be long technically. If you're willing to hold runners. So that's how it's one trade, but it's like there's like a beginner's version where you just get the scalp, and then there's like kind of a mastery version where you can start adding, like deciding when to hold runners. And the basic rule for holding runners is you have all of the criteria for the DVP trade, where you get above these VPOCs of the wave to the low and the wave to off the low. You get above that, then you get a buy trigger. That's for the scalp. Then all you need to do is break one of these and close above it. Now any long has the potential to be like a big long. So like I think that makes this actually really good, because now that I look at this, the stop on this is here, right? So as long as this one holds, I think I think this is actually valid even if it didn't have the trap. It's still making, so the where I'm getting tripped up is I'm not sure. This one did make a higher high, but it kind of looked like it got trapped here. So I wasn't really I'm not totally sure in this exact scenario if this is still valid as a higher low like this one is. I know this one's valid and this one is valid, but I don't know about this one. But it's still higher than this, and so the whole setup is simply that the likelihood of a higher low and a higher high is increased. And that's a higher low, and it's got a sign of aggression on it. So that's probably valid. I'm going to ask my coach about that tomorrow morning, or I guess that's in a couple hours. I should probably get some rest. Because I've seen that before, but it doesn't happen very often. But I've seen it before where like you make the higher low, you get a scalp out of it, you think it's going to go higher, it stops that one out, and then it traps back in again, but it's still valid down here. It's kind of like a complex pullback, if you will. And if I had to guess, I'd say that's probably 100% valid. That's neat. Alrighty. Well, this is getting pretty. This is now 3.5 hours. So you know what? I think I'm gonna stop it here, and then get some rest too. And then I'll do another video. Not I work tomorrow, but well, maybe I'll do it tomorrow. No, tomorrow's Thursday. I can do tomorrow. On the continuation trades, especially if we have a trend day tomorrow by chance, which we might because we have CPI. I can demonstrate, because today the trend day, it was not a typical trend day today. But if you have like an actual day with momentum, we can see how the continuation trades work. But it would be nice to be able to have something that I actually traded recently, so I can demonstrate exactly where. I mean, I can technically bring up any day and find them, but it's nice when I can actually remember it still. So if tomorrow is a trend day, I'll go ahead and do another one of these, and we'll talk about the continuation momentum trades that we can use the same exact signals for to get in. It's not that complicated, but like I said, it's the hard part is deciding whether or not you're looking for mean reversion or momentum. That's where it gets tricky. And so what Simon recommends is everyone just trades mean reversion and just skip the momentum. And I don't mind that at all. I think it's a really good way to start. Is just get really good at one thing and then slowly add more, right? But I've been trading momentum for years. And so I wanted to know right away, like, what if it's trending? Like, what do I do about that, right? Like, I wasn't comfortable just like not trading that. So I needed some way to participate. And so I insisted on learning it early, but I will say it did sometimes confuse me because I would start trying to take momentum trades at a time where I really should not. So you do need to know how to identify a trend day, or how to identify momentum. But if you already know how to trade momentum and you just want to know what that would look like on the algo, I will show you that maybe tomorrow or soon. So yeah, thanks everybody for watching, and I will leave this up on YouTube. If you look at the chat, you can see the info on how to reach me or my coach about the room or the algo. If you ever have any questions, you can always DM me on Twitter at RedBenTrader, or just comment here. Yeah, if you haven't seen any of my other videos, take a look. I've done live trading during all sorts of different hours of the day and different scenarios, and I
also have done trade reviews where I look over everything I did right, everything I did wrong, including like actual entries and exits, and I share everything from my P&L to whatever. So take a look. It's all up there. Like I said, it just is like a journaling process for me. It's a little embarrassing because I've gotten a lot better over the months, and like some of the decisions I was making months ago, I'm embarrassed at now. But that's how growth goes. Like you're gonna learn, and that's a good sign. So, like I said, thanks for sticking around for those of you who did, and I will see you guys next time.